right? Avoid taxes. That's the topic, right? And it's because the tax law is out there. The tax law is out there. So we've got to understand it, so we can then know how to apply it. Taxes are going to be, I would say, one of the largest expenses that you're going to make, right? One of the largest expenses you're going to make, maybe going forward. So you've got to understand what the tax laws are, and of course, how you can then sort of navigate that tax law and be a better citizen. Now, to be clear, paying taxes, paying taxes is a patriotic thing to do. Avoiding taxes is also a patriotic thing to do. Why? Taxes are not just about revenues. Taxes are not just about revenues. Taxes are also how the government redirects you to spend your money. So when the government says, for instance, that we want to tax cigarettes, the government is trying to make revenues off you if you smoke cigarettes. Their main aim is to discourage you from smoking cigarettes. So that way their cost of health doesn't really go through the roof when they're treating you down the line. Same with, with this tax regime that the government has passed. When the government says, for instance, that we are going to tax you, but we will give you a tax rebate or tax exemption if you pay into your retirement savings account. What the government is essentially saying is that, listen, if you contribute money for your retirement today, if you contribute money to your retirement savings account today, then of course we're going to support that because you are saving money for yourself into the future. So the government supports you saving money for yourself into the future. That's essentially what it is. And that's what we're trying to do today. So I've got YouTube up and running. I'm going to share the slides on YouTube and also on Twitter. And I'm going to try to do a presentation mode so that way we can sort of follow some great visuals I have done. Let me find that. I'm just going to do YouTube so you guys can actually follow. So there it is. And then we can start. So I got my PowerPoint slides here. I'm going to share. So YouTube folks, just give me a thumbs up or so. If you're on the space and you're on YouTube, just let me know if you can see the slides. And I'll also share also here on Twitter so we can essentially start, guys. Yeah. So what I'm going to do is on Twitter, I'm just going to go and share the same sort of like do a trend, if you may, so we can start. So give me a second to get that all sorted out, and then I will take you guys on this journey about taxation, right? So the very first thing to say is that tax avoidance, guys, is legal. If you are avoiding taxes, that is a perfectly legal exercise to do. If you are evading taxes, that's a different matter entirely, right? Because you don't want to evade taxes. Mr. Al Capone was arrested for evading taxes. So we don't want anyone to evade taxes. We basically want you guys to learn how to legally avoid taxes. Let's go on my next slide. This is not investment advice. I don't know if you guys on YouTube can see this, but essentially, this is not investment advice. I'm not your investment advisor. I'm not trying to show you or to sell you any product. Speak to your investment advisor before you do anything. And don't rely on this presentation as financial advice. So talk to your tax professional, and this is not investment advice. So let's go straight into it, right? Tax avoidance is legal, tax evasion is illegal. The tax reform offers many legal pathways to avoid taxes. So, everything I'm going to share with you today, everything we're going to talk about today, is all in that Tax Reform Act. There is nothing new we're doing. Everything we are sharing with you today is all going to be in the tax reform that has been passed. So, there's no Kalu is inventing anything from the air. No, 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 no. We are sharing with you what is already in the act, and of course, that's what we're going to talk around. So, again, I don't know if YouTube folks can see this. The Twitter guys, I've just showed you my first slide. YouTube folks, let me come back to you. You guys see my slides? No, you're not, right? Yeah. I don't know how to help you folks, right? So, are you seeing those slides? Yeah, let me see chat. Let me know in the chat if you can see them. But the first thing we want to talk around is who is going to pay what. Yeah, you can see my slides now. So, tax is Yeah, YouTube weekend scam. So let's start off, guys. Let's start off. So first of all, the first thing you have to understand is this: who is going to pay taxes in Nigeria? It is going to be Nigerian residents, and they're going to be paying taxes on their income. So we first of all have to identify two things here. Number one, who is a Nigerian resident? That's the very, very first thing, right? Because you've got to say, the screen is black. You've got to say, first of all, who is a Nigerian? Nigerian doesn't mean who has the passport. Nigerian means, as the taxman has defined it, who is a Nigerian resident. The first thing is that if you spend 183 days in Nigeria, you are a Nigerian under tax purposes. That means if you're an American citizen, but you spend 183 days in Nigeria, or you maintain a permanent home in Nigeria, taxed in your home country. If that applies to you, boys and girls, essentially you are a taxpayer in Nigeria. So that's the first thing. So let's say you spend 183 days in Nigeria, or you do not have any substantial quote unquote business in Nigeria, or you don't maintain a permanent home in Nigeria, then you're not a tax person for other Nigerian purposes. You're not going to be a tax person. That's essentially what they're saying. So your taxes will not follow, should we say, the other ways that we will tax Nigerians. We will tax Nigerians based on their income in Nigeria, but you are not a resident in Nigeria. So if you have a double tax arrangement, that's what would apply to you. If you don't have a double tax arrangement, then you're not resident in Nigeria. The income you're making in Nigeria, if it goes to your bank account, sure, file taxes, but you are not a Nigerian. So that income stream is not applicable to personal income taxes. The same way we won't tax a foreigner. If a foreigner had homes in Nigeria below 150 million naira, the same way, you're not a resident. So the key thing here is this: if you spend 185 days, that's half of the time in Nigeria, but you are also living in the US or in the UK, then you are Nigerian. So if you are Nigerian, then you have to file taxes in Nigeria. You cannot claim the foreign status and then say you will not pay taxes. You can't say, I have an American passport, thus I will not pay taxes for income I have earned in Nigeria. It wouldn't work that way if you spend more than 183 days in Nigeria. So, what's the way to avoid this? You've got to count the days you spend in Nigeria. If you're going to spend a lot of time in Nigeria, be aware that the magic number is 183 days in Nigeria. If you spend 183 days in Nigeria, you have a permanent home in Nigeria, you have a significant economic activity in Nigeria, and if you are not, you don't live in Nigeria and you do a contract in Nigeria, but you don't pay tax when you get back to your home country, then of course you will also be taxed in Nigeria because that economic activity happens in Nigeria. So the first way to look at it is to say, listen, if you are going to be if you have a foreign passport, be aware of the number of days that make you a resident of Nigeria. Once you're a resident of Nigeria, then this law applies to you. If you're not a resident of Nigeria, then this laws will not apply to you, right? Because you're a Nigerian by birth, but you're an American citizen or Kenyan citizen by passport. But if you're a Kenyan citizen, and you spend 200 days in Nigeria, then for the purposes of taxation, you'll be taken as a Nigerian, and of course, you would then pay those taxes. I hope that's pretty clear how we want to differentiate that, right? Excellent. So let's now go to the second thing that we're going to talk around, right? Which is going to be how then to avoid. Let's now go into the business and say, how can we then avoid? The first thing there is what we call the income strategy. Income strategy. The law says, I'm going to share the slide again with you guys on Twitter. The law says that if you earn less than 800,000, then you will not pay any tax if you earn less than 800,000. But that's not a good strategy for us. I mean, Who wants to have a strategy that says, I want to earn less than 800,000? That's nothing, right? We want to earn more. We want basically want to earn a lot more and then find out the legal ways not to pay tax on that. Now, I did look at all the provisions. The one that I do like, that I think makes more sense for us to do talk around, is the one around the Pension Reform Act. That's the one I think that makes more sense to us to really focus on and to speak around. So again, on Twitter, guys, I'm sharing the slides. I've said the second one now. Now we're on the income. So if you are earning more than 800,000, I want you to really look at your retirement savings account as your key account to avoid taxes legally. And this is what we call above the line deductions, because what's happening is this: if you earn a million naira and you are able to contribute 300,000 naira into your retirement savings account, then your income is no longer 1 million, it's 700,000 naira. So anything you contribute to your retirement savings account, you deduct that from your income, not as an expense, not below the line, but really above the line. You are saying your income is no longer 1 million, your income is 700,000, because you've taken away 300,000 to your retirement savings account. So now remember that your RSC, your retirement savings account, is based on 18%. That's the statutory limit, 18%. It's based on your housing, your basic housing, your transport, and of course your basics, right? You want to make sure that if you work in Nigeria, you are getting a pay slip. And that pay slip should break down your income into basic housing and transportation. So just don't get a pay slip. Just don't say, "Oh, I'm paying you. Here's a check." Insist you get a pay slip, and that pay slip should break down your income into basic, housing, and transportation. That's what you want to essentially get, because once you get that, you've qualified then to then pay 18% of that basic housing and transportation, right, as your statutory allowance. But want to go more than that statutory allowance. This is where we now talk about the real avoiding taxes. We want to avoid taxes using what we call the additional voluntary contributions that you can make on your pension deductions. So the way it's set up is this: if you then make an additional contribution, right, in excess of that 18%, you take that off your income. If you don't earn the income, then you're not paying the taxes. So, as much as 1/3 of your salary is available for you to contribute as additional voluntary contribution. Look at the cool part this here, right? Any amount of money you contribute to your additional voluntary contribution, you can take away in 5 years, and it's completely tax free. So let's say I'm working today and I keep on contributing 10% in excess of my 18%, 10% in excess of my 18% into my additional voluntary contribution. First of all, I'm reducing my tax income, my accessible profit, what they will tax me. I'm reducing that. But in 6 years, if I want to buy land, I want to jackpot, I want to get married, whatever I want to do, I can take away the contributions I have made, 50% to my additional voluntary contribution. I can take it away tax free. The other 50% is going to be added to my pension benefits. So this opens your mind to planning. Any income you save in your RSA as additional voluntary contribution, you can remove in 5 years without paying taxes. So if you're a high income earner, this is very, very good for you in quotes, because you are able to plan this out. If you say you are going to retire in 15 years, right, you can start to deduct those funds today and put it aside, because after 5 years, all those contributions are tax exempt. Remember, your total income, you are paying the tax on it. But the deductions from additional voluntary contributions, you are not going to pay a tax. So what are we saying? If you transfer your income, remember we talked about passive income. If you transfer your income streams from your salary to your additional voluntary contribution, you have shielded that from taxation after 5 years. I like this one because it gives you the power to plan how much you want to deduct or withdraw after 5 years. Now, the question is going to be, if you are self-employed, can you do this? Of course you can. Of course you should, right? Because if you are then working for yourself, let's say you are a lawyer, or you're just a hustler, or you're a content creator, you have to go and open a retirement savings account. Then you have to put in that retirement savings account the money that you're making. Pay yourself a salary, the excess, put it there. Or monies you can invest, put it there. Because in 5 years' time, it comes like that. All the money you're going to make, you can take out. That 50% of that ABC, you can take out after 5 years. So if you put 10 million there, you can take out 5 million after 5 years. If you ladder it properly, you can receive tax-free income after 5 years if you ladder properly. Ask your advisor what ladder means, right? You can do it properly and you can get that tax-free incentive. So we've talked about number one, where you live determines if you will pay taxation. So if you have an American passport, but you do business in Nigeria for more than 183 days, or you do substantial business here, or you maintain a permanent home in Nigeria, be careful. You're going to be exposed to paying taxes in Nigeria. So watch out for that 183-day limit. That's the first thing we talked about. Now we've spoken about your retirement savings account, how you can use your retirement savings account to take your active income, push it through there, and bring it out as additional voluntary contribution. Don't say 5 years is too long. It's 5 years to ensure the money gets to you tax free, right? Very important distinction there for you. So there are other tax benefits that you get. But like I said, I looked through them, and the pension one was one that gives you more bang for your buck. The other ones, guys, are going to be around your life premium for you and your spouse. Now, this one, why I didn't like it too much in terms of the bang for the buck was because it's just the premiums that are going to be deducted from your paycheck. So it's, you buy life insurance, what you pay as premium and what you pay for your spouse as premium, you deduct that also above the line from your income. So if you buy a life insurance policy of maybe 5 million naira, whatever premium you pay for yourself and your wife, you deduct that from your income, right? That's essentially what's going to happen. So this doesn't give you that bang. You don't put the money in insurance, and then when insurance pays you, no, it doesn't give you that bang. But still, it allows you reduce your taxes. Look at it this way: if you're in a high tax bracket, and you 1 million will make you qualify from, say, paying 18% tax to paying 25% tax. It's worthwhile for you to buy life insurance and reduce where you fall on the tax table. This is how you want to use this life insurance policy, the annuities, the NHIS, the NHF. This is how you want to use it. If you look at the tax table, guys, you will see your first 800,000 is you don't pay anything. Then you see your next amount, your next amount, your next amount. You see the taxes you pay on the right hand side. If you are $1 million, million naira between one tax bracket and the other tax bracket, it makes no sense to take that 1 million naira in as income and then qualify for the higher tax bracket. So it makes sense to look at your income, look at where you fall in the tax bracket, and say, can I buy my way into a lower tax bracket by buying these deductibles? So the point is, don't look at the insurance premium and say, oh, if I buy insurance premium, whatever I'm buying, I'm reducing my taxes. This is a above the line reduction. If you earn 1 million and you pay 100,000 for insurance premiums, your income is now 900,000. Very key. So if 1 million guys pay 10% income tax, but 900% guys, 900,000 naira guys pay 5% income, you want to see if you can use these deductions and buy yourself into a lower tax bracket. So life insurance premiums, Deferred annuities, which are like you go to an insurance company and you say, I'm going to give you money today, and I want you to give me back this money in 5 years' time. All that money you buy, all those fun things you buy with them is going to be deferred. The income is going to be deferred, or the payout is deferred. Once you pay for that premium for deferred annuity or life insurance premium, you pay no taxes, i.e., they reduce your income based on what you pay. You're able to write off your income to the amount that you pay as a premium for life insurance and for deferred annuities. NHIS, National Health Insurance Scheme, anything you pay as premium, you also deduct. Nigerian Housing Fund, you can pay statutory 2.5% of your income to NHF. If you pay interest on a mortgage on a home that you live in, primary residence, you can also deduct that primary residence as income that you will, sorry, deduct that from your income, so it reduces your income. Rent is kind of different. Rent is just going to be a 20% of whatever rent you pay. It's not top line or bottom line. It's just going to be 20% of whatever rent you pay. Is capped at 500,000. So whatever number you get, if it's more than 500,000, you cap it back to 500,000. So if you pay rent of 10 million, 20% of 10 million is 2 million. You only claim 500,000. So it's not really that, it's to reduce your taxable, what you pay as tax, but it's not going to reduce your above the line. We are interested in above the line deductions, which is your pensions, your life premiums, your annuities, your NHIS, and your National Housing Fund. Why are we interested in those ones? Because they reduce your taxes above the line, which means that your income, the income you earn is reduced, which then means that the taxes you pay, your tax rate is going to be a better tax rate because you are reducing your income. So I'm earning 10 million, but I'm paying tax as if I earn 5 million. That's what I'm saying. You are going to use these deductions to reduce your taxable income to give you a more preferential tax bracket. That's how you want to use this one. Sorry, I'm going to take your questions once I'm done with this. So just if you have a question, just park it. Lots of you want to speak. I will allow everyone to speak. I'll take your questions. I'm going to run through this presentation and then we'll just take all those questions. Not to worry, guys. Not to worry. Now, the next one I want to talk about now is going to be um, this is now we're now getting into the meat of the presentation, right? We're getting to the meat of the presentation. I call this the passive income strategy. And these are, should we say, laws that have, or should we say, opportunities that are in the act that the taxman has told us that, listen, guys, if you do this, we will not charge you a tax. That's what these are. If you invest this way, we will not charge you a tax. And I don't know, just want to make sure the guys on Twitter are following or are seeing the PowerPoint slides that I'm sharing. I've shared about three now. If you can see it on Twitter, just give me a what's it called, a thumbs up that you are following, and you can see the slides I'm sharing, just to make sure I'm carrying you guys along. Because a lot of figures, I want you just give me a thumbs up if you're on Twitter and you can see those slides that I'm sharing. I really would appreciate that. Yeah, I know the YouTube guys can see it, but perfect. Thank you so much. Let's come to our passive income strategy. What is this? Is this if you earn income, you pay tax on your income. That's how taxes work. You earn income, you pay a tax on your income. But the tax man is saying that we are going to give you certain incomes are exempt from taxes. That's what we'll talk about. What incomes are going to be exempt from taxes if you are a Nigerian taxpayer? Remember, a Nigerian taxpayer doesn't mean you have a Nigerian passport. It means you are making money in Nigeria for more than 183 days. You have a permanent home in Nigeria. You have substantial business in Nigeria. That's a taxpayer in Nigeria. Number one, if you earn dividends, interest, rent, royalties outside Nigeria and you bring it into Nigeria to invest, then you will not pay tax on the income that you generate from those, especially if you bring it in through approved channels. So what are they saying? Let's say you work in Nigeria and you make 100 million naira a year. If you take 50 million of that 100 million naira, 50 million, just say you take 30 million and you take it outside Nigeria, how you go to your app in Nigeria and you buy a money market fund in the US or in the UK. That money market fund pays you a dividend. You take that dividend, you bring it back to Nigeria the next year. This first year you earned naira, you took your naira, converted it to dollars, pounds, Canadian, whatever. You invested in a foreign asset class. That foreign asset class paid you dividends. You took that dividends, brought it to approved channels. The money came back to you in Lagos. You don't pay tax on that income. So if you start to do a process where you are taking money from your Nigerian account, buying a foreign asset, bringing the money back to Nigeria, the money coming back to Nigeria becomes income to you, but it's not taxable. So the first year 30, you do a table. Next year 30, next year 30. What will happen is that the streams of income that you're going to be earning from your dividends, your passive income, are no longer taxable to you. If you buy property in the UK, they pay you a dividend or they pay you rental. You bring that rental back to Nigeria. It's not going to be taxable to you. Dividends, interest, rents, royalties derived from outside Nigeria, brought into Nigeria through approved channels, it's tax exempt for you. That's the first one there. So your mind is now thinking, oh, wow, I can take Naira, buy something foreign that's going to pay me dividends. That foreign dividend pays me back income to Nigeria. The income I have in Nigeria, I don't pay tax on it. Your mind is thinking, I can see your mind's working. What else? If you have a Nigerian company that is doing exports, remember, wholly export. If all they are doing is exporting, any profit that company makes, zero taxes on it, right? Or if you export cocoa and you bring the cocoa proceeds back to Nigeria, that money from cocoa back to Nigeria, you don't pay tax on that money. So what if I had 100 million naira today and I went to Akwa Ibom, if I could get, because it's very, very hard to get cocoa today. I go to Akwa Ibom, I buy cocoa, and I take that 100 million naira and I export cocoa out. They buy the cocoa in Holland, they pay me euros. Maybe, I don't know how much it's going to be, maybe 10,000 euros. The 10,000 euros come back to my DOM account. Nigeria is saying that you will not pay tax on that 10 million. Remember, you're not going to pay tax on the first 100 on your naira because you are using that money to do a business to export the cocoa. The cocoa comes back, you don't pay tax on that. Also, if somebody is selling vegetable to Ebano in Canada and you say, okay, I want to invest in your business, this business is going to be only set up to export vegetables to Canada. Whatever profit you guys make on that business, you don't pay tax on it. So the way to do is that, again, you have income, you have to invest that income in this activity, export activity. It has to be only export. They can't be doing export and import. Mba, no import, export. It's got to be only export. So this just tells you that the government is telling you that for you to be a patriotic Nigerian, they want you to go and export. The more you export, the revenues you get from export, as long as you bring it back to Nigeria through approved channels, of course, it's tax exempt for you. So again, your mind is now working. That means that all those you can get up a few boys, set a company up, and say, what are the guaranteed things that I just want? I can export. I can export Nollywood movies. I can export Nigerian clothes. I can export palm oil. I can export cocoa. Whatever it is that you want to export, take your naira, do that export, bring money back to Nigeria. It's tax free. It's tax free, guys. This is the law. Everything we're quoting here, everything here is in the tax law. That's why I said it's a patriotic thing to do because the government wants you to do exports. And the more you export, the more you're going to make money for Nigeria. That's why they're making this for you tax free. So your brain is working. Yep. You are married. Your husband is not employed. You are a breadwinner. You take money, you set up a company owned by yourself and your husband. that company does exports. That's it. All the money you make goes to that company. The profit you guys make is tax free. The costs of the company are tax free. The dividend the company pays you is tax free. Your brain is working. Dividends distributed by an authorized collective investment scheme. What are collective investment schemes? Mutual funds, unit trust. You see, you go to your stockbroker, you see invest in mutual fund this or invest in ETF that, venture capital, PEs, private equity. Any funds you invest and then you get dividends back from these companies is tax free. Again, your brain is working. You get your Nigerian salary. You say, okay, how much do I need to spend? I need to spend money on food. Okay, the excess, what I do with the excess, I buy unit trust schemes from Nigeria. I buy money markets, I buy equity trust schemes as long as it is authorized by the Nigerian Security and Exchange Commission. If they pay you back your dividends, it's tax free. I didn't say withholding tax. It's tax exempt. It's gone. You're going to get that money back from them without paying taxes. Why? The government wants to encourage you to participate in the capital market. So it's giving you a tax-free way to do it. If you put money in the PE firm, they pay you back returns, it's tax-free. Venture capital, they pay you back, it's tax-free. ETFs, exchange traded funds, you put money, they pay you back, it's tax-free. The easiest one for me is you take your money, you buy a money market fund. Money market fund pays you back interest. Sure, you have to put in 100 million to get 10 million, Abi, but that 10 million is tax free. So every year, if interest rates go up, your tax free return is also increasing. You don't pay tax on that income. It's income, but you're not paying tax on that income. It's in the law. Fantastic, guys. Thanks for the. So, everyone will speak. Don't worry. We'll all speak. Are profits on a company engaged in sporting activities? If you have a company, let's say again, the wife is working, husband is not working. Husband is if it follows Chelsea, do something around Chelsea or something around Aimba, and the profits that company is making is not going to be taxable. Now, I confess, I don't know what they mean by sporting activities. It's a beer parlor where you watch Chelsea beat Arsenal, a sporting activity. It's making shoes in a bar, sporting shoes in a bar. Is it a sporting activity? I don't know. But this is what they are saying, that if you have a company engaged in sporting activities, then that company is going to earn income that is going to be tax free from you. And of course, the one that we all know, if you buy federal government and state government bonds, you get a tax exempt because the income that's going to come to you, you are lending money to the government, so the government is not going to tax. They want to encourage you to lend to them. My disappointment here is that it did not include local government bonds. Why? States, federal, and local governments are the federation. Local government should be able to borrow. Doesn't mean you should go and give them money, but they should have included them as well. But any income that you make from a state, a federal, or local government is going to be exempt from taxes. So, guys, what are we saying here, right? We are saying that if you are able to invest in any of these activities, the income you are making is going to be tax exempt. Remember, guys, the whole idea is convert your active income into passive income that is tax exempt. That's the game. Convert your active income into passive income that is tax exempt. That's what you want to do. Convert your passive income into active income that is tax exempt, right? Let's go to our next slide. Next slide. Next slide is going to be other things that you can do with real estate, especially. I like this one on real estate. We're going to talk about this one on real estate. How you can also transfer money and avoid taxes, and how you can also invest also to avoid taxes. Now, overall, capital gains means if you buy a car for 100 naira and you sell that car for 200 naira, you have made a profit of 100 naira. So capital gains, you bought something, you sold it, you make a profit. The government wants to tax that profit. But the government is saying that if the proceeds are less than 150 million, they won't tax you. If the gain is less than 10 million in a year, in 12 months, they will also not tax you. So again, if I buy shares and I sell my shares and my profit is not up to 10 million, I make 2 million. Next time I make 4 million. As long as I've not crossed 10 million, I don't pay tax on that capital gain. The capital gain itself, I don't pay tax. Or I buy land and I sell land in less than 1 year. It gets no more than 10 million naira. I don't pay taxes. The proceeds to me should be less than 150. So the whole transaction should be less than 150. And I don't gain less more than 10 million in 12 months. So you don't pay tax on that. So if you don't like something, if you bought something, you want to sell it very, very quickly. If you allow it to accumulate interest, of course, you then go into paying taxes on that, which is not bad. You've made your profit. So you'll still pay tax on the profit. But if you don't want to pay tax at all, dispose early because it's going to be once it gets more than 150 million, then it's exposed to capital gains. But again, it's not a bad deal. You've made money. That's fine. But what about private residences? The law says that even if I sell a private residence for more than this 150 million, right? If it's my private residence, I don't pay tax on the sale of my private residence. I don't pay tax on the sale of my private residence. So let's say I have a house in Ikoyi, it's worth 150 million naira. I can gift that house to my daughter. Because it's a gift, my daughter will not pay tax on that gift. My daughter is now instantly worth 150 million naira. What if she sells that house? What if she sells that house? Well, she's not going to pay capital gains tax because it's her personal residence. She has to stay live in that house. I would just suggest maybe 5 years, right? So because it's her personal house, how did she get the house? Capital through a gift. I would say hold it for 5 years and sell because it's your personal home. Your castle is tax free. She's not going to pay tax on that. So again, if you have this asset, you can do this only once. You can't give gifts every year. This is a one-time exception. So if you have this big house that you're not going to use, and you have kids that you want to give them money today, think about this. Give them the house. They have to live in the house as a primary residence. If they sell that house and go to Canada or go to the village, it's their money. Because it's the personal residence they are selling, they are not going to pay tax on that transaction, capital gains tax on that transaction. So that's another way for you to structure gifting assets, not just to give. We know gifts are free, we already know that. But because the person you are gifting to can dispose and get that income tax free because it's a prime residence, just a house, and it's of course going to be tax free. Then the last one here is going to be your pension company. So if you want to work for anyone in Nigeria today, you want to make sure you work for a company that's going to pay you a pension. Because again, like we talked around the first one, if you don't get a pension account with an additional voluntary contribution, you are losing a way to get monies washed through the pension system for tax-free returns. So if you have two choices, one pays you pension, one doesn't pay you pension, ask the guy, why are you not paying pensions? Even if they don't pay you pensions, you've got to get that pay stub that says basic housing and transport. Everyone has got to insist on this from the guy in employment because if you don't do it this way, you can't get that tax break. You've got to file your basic, your housing, your transportation to be able to get that relief. All right, guys, let's go to the next one, uh, which is going to be corporate income tax. So I'm now assuming that we've sort of gone through the personal income side, right? And you guys have seen a lot of innovative. Again, there's nothing innovative here. These things are all in the tax law. They are all in the tax law. I just waited on Twitter. I haven't seen anyone do how to avoid taxes. So I said to do it. But yeah, I'm not giving you any revelation. It's all in the tax law. Remember, tax avoidance is legal. The government is telling you if you do this, you will not pay taxes, not me. The government is the one telling you if you do this, you will not pay taxes. All I'm just telling you is how to do it. I'm showing you the forest, right? But I'm not showing you the tree. You then have to go in and say, okay, I'm going to find this tree in this forest and I'm going to take advantage of it. So let's share corporate income taxes. Again, let me just make this point. This space is only for personal taxpayers and small and medium enterprises. If you're a PLC big boy, go and hire your own tax lawyer. You have lots of ways to do those things there. But this for the small guy, the guy employing 10 people, small firm that wants to know also how can they apply a few the things that tax to reduce their taxable income. This is who this space is for. It's not for the guys that can afford a lawyer and all that, right? So I think this first point really tells you all you need to do to avoid tax as a personal person. All you need to do. Any profits or gains of any company or enterprise, deducted all expense for the period wholly and exclusively incurred in the production of income. In other words, any income that any company can show was used wholly and exclusively to make income is tax deductible. That's just what it means. If you work for a farm in a farm and you buy diesel to run your irrigation machine, whatever you use to run that machine is tax deductible. If you're a content creator and you buy a camera, you pay agboro for the right to film, you pay for buses, you pay for lunch. All those things are tax deductible because you are using them to create income in the production of income. If you are Davido, I've used this example many times, and you buy a Lamborghini, that Lamborghini is tax deductible because you're using that Lamborghini to do videos for your for your music videos, which generate income for you. So any company at all that is using any expense wholly and exclusive to generate income, you can write that income off. This is, of course, in line with our agricultural export. We said before, if you export anything in Nigeria, you don't pay tax if you bring the money back. If you export agriculture, you get a tax exemption for 5 years. This is separate from that. If you set up a farm in Nigeria, you get tax break for 5 years. The first 5 years, no taxes. But I'm saying this is in after that 5 years, any expense that you use to make income in that farm is also going to be tax deductible. Now, in the tax law, we define a small company as turnover of 100 million or below and fixed assets not exceeding 250 million. There's 50 million, there's 100 million in the Tax Act. Mr. Taiwo has clarified that 100 million is the right number. So we're going to go with 100 million. So for me, I would say hire your accountant, look at what you're doing in your operations and say, okay, hey, how can I legally avoid taxes again? But they've already given you the answer. Any expense you use to make income, you can deduct, including VAT, which we're going to talk around now, right? Any income you use to make your income, any expense used to make your income, you can deduct from your taxes. So now going to talk around some certain exemptions as well that you can also add to books. Love you all like mad. So now we are talking around a few exemptions, right? That just I want to just highlight these exemptions for the business people out there. If you pay any interest or on debt employed to generate income for the trade, business, or profession, you can write that tax off. So if you borrow money and you are paying interest on debt, is right, you can write that off, right? So they're encouraging you to grow by taking in credits and to expand your operations. And of course, the interest you incur with that expansion, you can write off. This says business, profession, or vocation. So if you're making skits, if you're a YouTube guy, you're making skits on the roads of Aba, and you borrowed money from a bank to do that business, the law is saying you can write off the interest you used to buy that camera, to buy the drone, to pay all those people. You can write it off your taxes. That's what the law is saying. Any expense in the repair of plants, equipment, fixtures, yep, all this is all good. So when you do your repairs, keep your bills. You go to vulcanizer, keep your receipt. You call an electrician, keep your receipt. That's the point. It's for whatever small enterprises now. Yeah. Any contribution you make to your staff pension, provident, retirement benefits approved by the Pension Reform Act is also tax exempt. So again, if you know this, guys, why would you have employees and not pay them pension? If you pay employees pension, you write it off your taxes, and your employees are happier. They stay more with you because they can also then do additional voluntary contribution. You are gaining, your employees are happy. Why would you not pay pensions to your employees? Doesn't make any sense to avoid or to ignore this exemption for you. Rent. If you are paying rent, you can also write that off. And it says, in respect of land and building occupied for the purpose of generating income. So if I'm a farmer and I rent land, I can write that rental off my tax income. So you've got to have an accountant talking to you. You can't do this by yourself because an accountant was going to tell you more of this. Is just what I brought out on PowerPoint. Your accountant is going to tell you more about things like this. Any salary you pay, you can write off. Any cost to the company, you can write off. So don't owe your employees salaries because when you pay them a salary, you write it off. Very, very good things here, guys. And you can see, like I said, to pay your taxes is patriotic. Only patriotic Nigerians pay salaries, right? So nothing we have said here is illegal. Everything we have said here is part of the Pension Reform Act. Everything we have said here. Now, our second to the last slide, we're going to talk around some special exemptions there. Just wanted you guys to be aware of them. This is going to be, if you're in an export zone, you don't pay taxes, that's fine. For your VAT, please make sure going forward you track all VATs. VAT going out, VAT coming in. Why? Because there is this input tax you can claim back. So if you have a company and you buy, for instance, diesel, right? And the company charges you VAT, just assuming they charge you VAT on the diesel. Now you can claim that input VAT, you can claim it back and say that was a cost. So big, big, big change for you there. Capital allowances, of course, are still there. If you invest in an equipment, you can claim that allowance over years and say, oh, I bought generator, I'm going to claim that cost of generator as a capital allowance in running my business. There's now this economic development tax incentive. It's now replaced, I think, the pioneer taxes. So before the pioneer taxes, if you invest in a rural area where there's no water or power, you could actually claim 100% of that investment out of your taxes. So let's say you want to manufacture socks. If you manufacture socks, just an example, in Lagos, Lagos has water, power, and roads, no exemption. But if you go to your village where there's no power, water, roads, and you set up a socks factory in your village, you are able to claim a lot of those capital expenses out of your profit because there's no road there. So government's going to say, because we didn't give you power, we're going to allow you claim a lot of that as tax incentive. That's what they're saying there, guys. Yes, guys. We're gonna let you guys speak now if you have all those questions. Finally, guys, let me just close by saying most of what I've said here, even before the tax law was passed, we already had these things in my book, right? Already, this thing was already in my book. Some things have been rehashed. Maybe they increased the amount, or they said it formally, but some of these things have been there. And if you had gotten the book, which I'm now shamelessly plugging, you would have seen most of these things in the book already. And you would have also prepared yourself for this because you want to get ready. The main thing about this tax reform is that there are many things that you have to do implementation. If you do not file any tax return, whether you make 1 naira or 1 billion, you're going to pay taxes because you have not filed. You've got to file taxes to be able to get the exemption. So don't assume I'm not going to file, I earn 50K a year. No, they will tax your ass because you've got to file. So knowledge is very important, but more than knowledge, implementation of that knowledge is very, very important. So like I said today, I have shared with you guys a lot of things, right? It's going to be recorded. These slides are there. Go and show your tax accountant and ask your tax accountant, hey, this guy said this. Is it true? How else can I take advantage of this? Make sure you also do your own verification. I'm human. I could be wrong. At the very beginning, I put the disclaimer there. I could be wrong. So make sure you also ask your tax guy before you invest. Most of the things are generics that most people know. The idea is this: if you don't pay taxes, you have more money to consume. The more you consume, the more the economy is growing. So don't think it's a bad thing that you're not paying taxes. You are helping the government to improve the GDP and the consumption by avoiding taxes. That's why you are a patriot. With that, note, let me go back to the floor. Let's get Josie. Josie, how are you? Thanks for hanging in there. What's your question?
Thanks for the opportunity, Mr. Kalu. Compliments of the season. I I just wanted to ask, does it make financial sense for a let's say civil servant to um, build up their pension plan? You said they can save up to one third of their income. Does it make financial sense? Because while the space was on, I did a quick look up and I discovered the naira has lost at an average of 10% annually in the past 25 years. So just to save up on maybe a 5 to 7% um, taxation, does it make financial sense to increase one's pension fund just to save up on that? I don't know if you get my points.
I I completely do. You're basically saying, hey, why am I putting money in naira when naira is falling? Does it make sense to
Exactly.
deny consumption when I can? Okay, look at it this way. First of all, because the law is statutory to 18%, if you don't do your 8%, you've already lost 10% income. So first of all, everybody here, no argument. Make sure you do your own 8% for your retirement savings account. Why? Because then the company can give you 10%. Whether you lose it or don't lose it, you're going to get at least 10%. Let's now go back to the contributions to your question, Joseph. Just remember that those funds are invested. We don't take the cash and bury it. We take those funds and we invest it. In the last 10 years, the Nigerian stock market has delivered the largest return in the world for 2 years out of the last 10 years. I believe it was 2022. Folks can check for me. Nigeria's stock market was the best performing stock market in the entire world. Folks can do a quick fact check. So the market is not a bad market to invest in, Nigerian stock market. If you invest in Nigerian stock market, you are buying Dangote, you are buying Nigerian banks, you are buying a few solid companies there, Seplat. It's very diversified. So it's better. Like I said in the example, your 18% is statutory. Do it to get your 10%. Do it. If you do ABCs, additional voluntary contributions, and you take the money out after 5 years, if the market crashes, pull the money out after 5 years. It's yours, tax free. That's the point I'm making again with that. The ABCs, 50% of your ABCs can be ABC means additional voluntary contribution can be pulled away when you retire. So essentially, if you don't like the market again, or you want to travel, or you want to start up a new business, there is no other investment that gives you tax-free compounded savings than the retirement savings account. That's why you want to take advantage of that ABC, sir. Does that make sense? It's not just the returns, but that you can get 50% tax-free. Where else can you get that kind of offer? Right, Josie? Does that make sense?
Yeah, it does. It does. Thanks very much.
Fantastic, Josie. Let's get Chibola. Chibola, what's in your mind?
Hi, good evening. Points in the NCA, and at least for small businesses and people, people that or personal income earners, right? Um, but something you mentioned, and I think it's important. People's tax or your finances might be different, right? So you need to still consider reaching out to an accountant or a tax professional. And some of the things you've mentioned, like, deduction of life insurance premium or interest on mortgages. Um, it depends on the state that you are in, right? Because for
It
personal,
doesn't depend on the state. It doesn't depend on the state. It's just clear. If you contribute to life insurance premiums, if that's the federal side,
Kalu,
you get a deduction.
yeah, you get a deduction. What I'm saying is that to get that deduction, there are administrative procedures, right? Each state gives clarity. For example, LRS will tell you that, although it should be owner occupied, right? So LRS will tell you that you need to be staying in that property that you say is yours so that you can get the interest on deduction. So
Yeah, that's what I said. It has to be owner occupied because the
owner
mortgage is
occupied
owner
sometimes.
occupied.
So that's why I said it's peculiar. Sometimes if the loan is to finance multiple apartments in the
No, no,
same
no.
building,
Just to
sometimes
be clear.
hold on. That's what I'm
No, I don't
saying.
want you. I want you to
I'm
go
not
straight
I'm
to the
not I'm not
question.
I'm not deviating. I'm not deviating. What I'm just saying is that you need to be careful. I'm not saying you're wrong. What may I believe is what you said, that the interest on the property, you should get a deduction for it, which is fine. But you need to also be careful. You need to check what are the issues with your own state, right? Because personal income tax is paid to the state, same as interest or mortgage, which is
Yeah, but but
life premiums.
Jibola, hold on. The personal income tax is payee.
Yeah.
The deduction is above the line. So they are saying if you do this, you get deduction. I want, like I said, I'm showing the forest. Go and look for the tree. So I get you. Very very good point you're making, but there's no way we can detail out tax
So
complicities down to
so
the minutes.
I'm not detailing out, but you've mentioned everything. And then the second bit is you know, trying to ensure that you document everything. If you're a small business owner, like you've mentioned, document everything. Get your receipts. If you're doing transfers, like I'd advise you, you separate your accounts, personal accounts and business accounts.
Very good.
Get
Very good.
your receipts. Ensure that you have a good narration in terms of you are transferring money, because most of the
Very good.
expenses that are related to your business would be
Very good.
deductible. So those are some of the key things. But most importantly, after all, talk to a professional to help you, look at your accounts, file your returns and all. And I think you've done a good summary. And I think if people just try to seek some advice, then I don't think they would have any worry.
Yeah, I completely agree. And just to highlight what you said, very important. Just to highlight the point you made, make sure you are separating your individual from your business. I think we talked about this some time ago in this space. Do not put any personal transactions on your business account. When we had this space, lots of Pokemon said, "Hey, Kalu, in my company, they pay me money to pay salaries. I'm the foreman in my construction company. So I get all the salaries into my account, then I pay the salaries to the people. No more from 2026. Don't do that anymore. The company should open up a business account and make you a signer. So they will pay money to the business account. Then you, as a signer, can go to that business account and pay people's salary. Whatever money you are sending on your online, on your bank, do a memo. If you are giving your mother in the village a gift, say gift for mama's birthday, memo, write it and send it because you forget. If you are giving your Ron's girl money, put money for Ron's girl, put it there. You will forget what it's for. You are laughing, but you forget. Write everything there, detail it, have a budget. So, Jibola, very, very good point to remind us that we have to document, we have to file. Like I said, talk to a tax professional. I'm only human. I don't want to make sure that whatever I've said is you agree with the tax professional before you go ahead and implement. Jibola, appreciate that very, very well. Yeah. BD, I've got BD, Ben Kubisel.
Yeah. Thank you so much, Kalu, for the insight from your talk. I believe we'll be able to watch the video on YouTube again because
Sure.
most of us here couldn't really see your slide. But I just have maybe three or four questions. If you could help us walk us on how we could personally file taxes. For those people who are receiving salaries from companies, I think
Yeah.
that's quite straightforward. But if you could help us walk us through how that will work for people to file. The second question, which is a shootout from that one. So if I work for a company and I do side hustles, how do I how do I how do I reconcile that money when it's, let's say, shoots above, let's say it gets to 5 million? Is there a way I could reconcile that and take some of this avoidance that you said, because it's going to be income from pay and that of your side hustle? How do you reconcile that? Then also can you file separately if you get side hustle plus the normal pay that organizations pay for on your behalf? That's one question.
Oh, hold on, just hold on. So, one thing you have to know, see, if you want to file, you file personally, state by state. That's what Jibola was trying to emphasize. You
Yeah.
file state by state. So in Abia State, you go to Abia State Internal Revenue Service, you file your personal income tax. It's only federal company income tax that you then file to the federal government, which is going to be the Nigerian Revenue Service, former FIRS, right? Okay, any income, we don't differentiate between gig income, side hustle, or salary. Any income is taxable, any and all. If you do Bitcoin, you get airdrops, it's taxable. If your boyfriend gives you money, it's taxable. If it doesn't say it's a gift, it's taxable. Any income that comes into your accounts is looked as income. However,
Yeah.
from that income, you only then go by deductions and you file. So, for instance, if you get your salary, your company might say, okay, hey, we paid you money, we're going to file for you for the income we're paying you. It's left to you to then go and file your own personal assessment to show I bought life insurance, I did NHF, I did investments. You have to go do that yourself with your state your state tax authorities to claim those deductions so that you don't have a tax payment at the bottom.
Okay, so you sorry, if I'm clear, you're going to do that independent of what your organization is doing.
That is correct. Remember that in the past, the way Nigerians paid tax is that you got a 20% tax. What's the word now? When you got your income, the government says 20% is a tax-free income, automatic. So what used to happen in the past is that because your company is paying you your salary, they simply take 20% automatic, apply as your tax break, and you get a tax-free. They just file for you because it's from 20% of your consolidated revenue, which your company is paying on your behalf. So that was what used to happen in the past. Now, there is no more automatic 20%. Nothing is automatic. Even the 800,000 naira is not automatic. You have to file to say you earn 700,000, then you don't pay tax. If you earn 700,000 and you don't file, you will pay tax. Because the tax man will say, I've not gotten a tax return from you. I'm going to assume you earn 1 million and I'll tax you. It's in the law. They can assume income and they can tax you. I think it's section 91. So you've got to make sure you file every year those taxes. Yeah?
Is it every year
Sometimes
or monthly? Sorry.
you have to file taxes yearly. If you want to file monthly, that's going to be too much for you. So what you can do is to have an account, open an account, call that account tax account. Every month, calculate your tax, pay to your tax account. End of the year, cut a check to your tax authorities, and you have your schedules. You have scanners. All your receipts for that month, scan them, attach your report, scan it and keep it. 2025 March, you keep it. End of the year, you cut one check to your tax authorities. You have your record in case they come back to you. You have everything. Scan, save on the cloud. It can never get lost. That's how you want to do it. So you can accrue monthly and pay once to them yearly, sir.
All right, I imagine how messy it would be for
It's
Nigerians.
not messy. It's not
No,
messy.
no,
It's
no.
very
What I mean by that is that a lot of people are not savvy with
well. You
this
have
kind
to
of.
be. You have to
I know,
be.
I
You're
know.
not.
I think it's gonna be messy in the first year because a lot of this is new for a lot of people, but that's fine. So I just want to clear one part
Real
that
quick, sir. We have to take 4 questions. Real quick. Many people want to speak. Real quick. Last question. Real quick.
okay. The last question. So I was also going to ask. You talked about taking your active income to become a lot more passive. So if you receive money and you move it to mutual fund, um, um, what you clearly stated was it the returns you get from that will not be tax except for the withholding tax, right?
It's not. It's no longer taxable income. There's no withholding tax. It's just no tax. If you take 1 million naira, you buy mutual funds. The mutual fund company pays you 100,000 naira interest, which is your interest you are getting. That 100K is tax exempt. It's not income. It's not taxable income to you.
Okay, so let me just create the last scenario. So just
No, sir. We have to
imagine that.
go. We have to go, Bill. We have to
Okay,
go.
thank
Let's
you.
get. Well,
Yeah.
let's get Winos. Winos say WINOSC at Gbadan. Winos say how you doing? We know say it's not right. Let's get Kosi, Kosi. Kosi, how you doing?
Okay, I'm good. I have a question.
Yes, sir.
Let's say you live abroad, you don't earn money from Nigeria, but you have landed properties in Nigeria that keep growing in value.
Yes,
Do you
sir.
pay taxes for having properties in Nigeria, although that you are not making money from them, but they keep appreciating in value?
No, sir, you don't because we don't tax assets, we tax income. So if the land value just keeps on going up, it's just the asset that is going on, but you're an American passport holder and you do not stay in Nigeria for 183 days, then for tax purpose, you're not a Nigerian tax payer. Just to give you the full answer, sir.
All right, thank you.
Fantastic. You're welcome. Let's go Okaifo or Haifo. YouTube guys, you can ask me a question on the just ask me on the chat. I'll answer. Yeah, go ahead.
Yes, please. I want us to thoroughly define what we mean by income, grants, scholarship, gift from family and friends. How can all these things be called income? What is
It's
income according
it's
to the
not
tax
income.
collector?
They're very, very clear. If you have a gift, it's not income. If you have a grant, it's not income. Income is anything that is, I don't know how to define income. They stated what income was, they didn't define it. So salary, the Bitcoin, the interest, dividends, bonus, those are all income. That's how they just stated what income is. They didn't define and say income is this. So maybe that's just answering you, sir. Yes, sir. You're good?
From the angle of gifts, gifting from family and friends.
Yeah, so with gift is a very, very funny thing, right? I would say this: if your father gives you 10 million naira as a gift, you're fine. But let's say your father is giving you 10 million naira or 1 million naira every month as a gift. They'll frown on that because that can't be a gift. You can't have perpetual gifts in eternity and call it a gift. What is a gift? One time, huge. It can be 2 time, but not every time. So use your intuition and say, is this a gift? If I'm paying my girlfriend salary and I call it a gift, they'll say it's not gift, it's income to her. So I'm giving her every month. I can't be giving her a gift every month.
Win from lottery and
What do you say, sir?
lottery.
Lottery is also income. I think sports winnings, there's some that are not taxable. Lottery is taxable, yes. Just to be clear on that. All right. Thank you so much, Akaifo. Let's get to Big George. To Big George. Arinze Chuku. Hmm.
Okay, yeah. Good evening.
How you doing?
Please, I want to. Yeah, I'm fine. I'm fine. Thank you. I want to know. How about maybe crypto guys now? For example,
In
would
the
I
crypto.
do Web3 airdrops and all?
In
Because
crypto.
when we want to convert our USDT to naira, you get they tax us there on Binance. Like they collect a little amount of percentage and all. Is it after paying tax on Binance or on Bybit and other P2P platforms? Then we'll now have to come and start paying personal income tax again.
So let's just be
So I
clear.
really want to I want you to explain, yeah, like
Big George,
converting your
Big
crypto
George,
to or exchanges now. Yes.
see, whatever, don't use technical words and confuse the tax man. It's a very, very simple thing, right? The activity you are
Okay.
doing, are you earning income from it? That's a simple question. Because it's an asset, right? What if you sell one?
Yes.
If you sell one uncle, will you pay income on that? Yes, because you have sold it and you have received income. What if you get airdrop? Is it income? Yes, because that is an asset that you are going to sell tomorrow. So it's an asset. You've got income. Yes, you pay income. Remember, you pay income when you sell. If you receive it, it is income. If you sell, capital gains may apply if it's above that 150, right? So they've sort of covered all those loopholes, really. Yeah. Makes sense? Makes sense, sir? Big George, are we good?
Yeah, yeah, yeah.
Sorry,
So
it's not my law. I don't agree.
okay, okay. Yeah, okay, sure. Yeah, I understand.
All right, fantastic. Let me
Thank
get
you.
Winose again. Winose, you're welcome, sir. Winose, WINOSC at Guy Badin. Winose, are you ready to speak now? All right, fantastic. Let's get YMD. YMD Esquire. YMD,
Hello, good evening.
how you doing, ma'am?
I'm good. Hope you're having a great day.
Yes, I am. Thank you so much for asking.
Okay, I have a few questions for clarification purposes. So, you spoke about like some ways you can get a cutoff as like a limit to your income. So, if you get like a million naira, you could put 200,000 naira as like a life insurance, and then you pay taxes within the 800,000
Okay.
tax bracket. So I want to ask, if you get that 1 million naira and you use 200,000 to pay to buy into a mutual fund, do you still have to pay for the 1 million naira tax bracket or for the 800,000?
That's a good question. So let me just explain again, right? If you earn 800,000 naira, by default in the law, that 800,000 is not taxable income. Your first 800,000 is not taxable income. So let's say you earn 1 million naira, or let's say you earn 1.8 million naira, and you get paid 1.8 million, and you take 800,000 naira and you say, I'm going to survive with 800K for the whole year. And you take your 1 million and you go buy a mutual fund, an approved SEC mutual fund, then your tax income is zero because you've taken that income, put in the mutual fund, right? So the income you make from that mutual fund is not taxable. The 800K is tax free. The 1 million, that extra, you will pay income tax on that, right, for the first year. But when you invest that money into your mutual fund, the money you get from the mutual fund is tax free. So the first year you get the money, right? Anything above 800K, you pay tax. But if you take that 1 million and you buy a mutual fund, the next year when they pay you the income is tax exempt. Does that make sense what I'm saying?
Yes, yes.
Yeah.
Okay.
So 800K is automatic. Another thing, you add tax on it. But when we say above the line, you can reduce your taxable income for above the line items. When you buy a mutual fund, it's not above the line. It just means the revenue you are getting back is not taxable, but you will pay tax on that income you are using to buy the mutual fund. Hope that makes sense.
Yes. Also, I
Fantastic.
wanted to ask for this international investments,
Yeah.
those for this export-based businesses, if you if you maybe you want to go into processing and the equipment used for processing are not available in Nigeria and you import the equipment, would it still be an export-focused business? Because everything you're making is
Yeah,
for export, so you need to
yeah,
import
great
the
question.
equipment.
I think when you import for agriculture, it's tax exempt as well. I believe so. I could be wrong, but I think when you import tractors, you don't pay tax. And you are importing a corn machine. In the first 5 years, you won't pay tax. So that's going to be covered generally under that. Yeah, makes sense.
Yeah, that makes sense.
Mm-hmm,
All right.
mm-hmm.
Thank you very
Fantastic. Thanks. Appreciate. Thanks for calling me. Yeah. Okay, Ian. Let's go, Ian. Ian P.
Hello,
Ian Patrick. Hey, yeah, Ian, how you
good
doing?
good evening. I'm fine, thank you, sir. So I have
Fantastic.
a question now. With Bitcoin, Binance, right?
Mm-hmm.
You sometimes you have money in Binance, they should tax you for that. Now, in other places, I know what happens is they have um Bitcoin wallets that they can regulate. So if you trade, for example, I trade in 1K.
Mm-hmm.
Once I'm redrawing, the tax guy already knows if I'm in profit or not. So he takes his money.
Good point.
Yes, from there. So that's I know of Coinbase.
All
So
of
when we
them do it.
redraw,
All of them. So there was what they call tax loss harvesting. All firms in the US do it. So if you sell at a
yes,
loss, you don't pay. You can use those losses to write off your taxes.
yes,
Yes,
yeah.
but I think in Nigeria's case, it is restricted. You can only use passive income to write off passive income. So, if, for instance, if you have active income, which is your salary, then you make Bitcoin loss. You can't use that passive income to write off active income. I believe you can have to. You also use that loss to only write off profits in your Bitcoin wallet. I think I gotta have to be sure of this, but I think that's what the law is saying. You can't use it in your total tax to reduce your total taxes. You can only use passive income to reduce passive income. In my
Okay,
head, I'm confusing US and Nigeria, but I think that's the
okay.
law. Yeah,
The
for Nigeria.
second thing I want to ask, you mentioned something of 183 days or 186 days outside
One eight
Nigeria.
three. Yeah, 183.
O- Okay, you're not going to. Okay, you're not going to be taxed. So if, for example, I have
No, no,
money in
no. That's
Nigeria,
not no, no, that's not what I said. So what I'm saying is
okay.
that if you go back to the what I'm trying to say that who is a resident? Remember, this is a Nigerian tax law. Nigerian tax law. So the question is that who is going to be taxed? Is going to be a Nigerian. So
Hmm.
who is a Nigerian? A Nigerian, according to the taxman, is someone that spends 183 days in Nigeria minimum, or has a permanent home in Nigeria, or has a significant economic presence in Nigeria, or if you don't live in Nigeria at all, but you're not going to be taxed in Canada, then you also be taxed as a Nigerian. Does that make sense? So that they're saying you can't come to Nigeria with US passport, make 1 billion, and say I'm an American and run back to America. That's what they're trying to avoid.
Okay, so but so how do one go? I just need to know how to avoid this because if
I'm
you're in
just
Nigeria, for
I can't
example,
tell you if you're in Nigeria for one of those days, then count the days. That's what I just said. Count the days.
of course, okay, for me, I'm not in Nigeria for those days.
If your business in Nigeria is making taxes, the business will pay company income tax. But you, as an individual, is not paying personal income
Mm,
tax
okay,
because you are not resident in
okay,
Nigeria. That's resident does not mean company residency.
okay.
You have 4 flats in Nigeria, right? Those 4 flats are owned by Patrick Company. Patrick Company pays Patrick dividends. What they are saying is that Patrick Company will pay company income tax because it's
Mm,
Nigeria. But the dividend that goes to Patrick is not taxable because Patrick is not a Nigerian according to how they define a Nigerian. You've not spent 22 days in Nigeria. You
Mm.
don't have a permanent home in Nigeria. Remember, you might have a home, sell land, Samito. How you doing? I sell land.
I'm doing very well, Kalu. Good evening, guys. So I have two questions. The very first one is a situation, a scenario where someone who was indebted to you refunds a refund of debts.
Mm. Ooh.
How does that? How what's the implication of the tax on that? A refund of debt. Okay, so that is the first question I have.
Can I answer that first? Because I don't want to
All
put you
right.
rest.
Yes. Sure.
So
Please.
that, my brother, that's income. Oh. That's income. Because you know why? When the person
Mm.
owed you and did not pay, you can write off that bad debt as an expense and reduce your taxes. So let's say you lend money to somebody, the person does not pay you back. That bad debt, you can write it off as an expense, Abi. So let's say you
Yes.
written off that loan as an expense, and then the person now became born again and came back and paid you those that what he was owing you. That's income to you, fresh income to you, which you now have to pay tax on.
Mm.
All right. So ask your second question.
All right. So the second question has to do with the mode of earning. For example, a scenario where income hits maybe a foreign account before being moved to local accounts. How does that imply? Maybe like for remote workers or freelancers who are resident in Nigeria, but the
Mm.
the income doesn't hit a Nigerian account first.
Yeah, they've won. Those are the people we are targeting. If you work in Nigeria, you work in Delta State, you work for
Yeah.
Amazon. Amazon is paying you money to your American bank account. What
Hmm.
Nigeria is saying is that if you receive dividend, interest, rent, royalty, they didn't say salary,
Yeah.
dividend, interest, rent, royalty from outside Nigeria, and you bring it into Nigeria through approved channels, that money you are bringing to Nigeria is tax exempt. That's what Nigeria is saying. So that means that because I didn't say salary, I won't imply salary. But I think I'm sure if you bring your salary, they might not. I don't want to say what is not in the act, but they are basically saying dividend, interest, rent, and royalty derived outside Nigeria and brought into Nigeria is not taxable. That's what they are saying. Maybe you can ask for clarification and say, does that include salary? Or does it mean the person has to take his salary and then buy a bond and then take the bond income back to Nigeria? But that's what the law is saying. I don't want to imply outside what the law is saying.
Mm. Oh, all right, that's interesting. I got an idea from that, so I understand what you're saying.
Send my 10%.
Thank you very much. We'll do.
Yes, sir.
Thank you. All right.
You had a second question, real quick?
I asked two questions already.
Fantastic. Thank you, sir. I appreciate you.
Thank
Mazi
you.
FX. Mazi FX. You guys have
Yeah,
mic. What's up?
good evening. Uh, Good evening. Please, am
Yeah,
I
how are you?
audible?
Yes, you are, sir.
All right. Thank you very much for holding such an educative space. It's just that it's so painful that I'm coming late. But I'm just curious. I just want to ask one question because it's something that involves what I do. I am a forex trader, and we all know how risky the business is. I make losses, I make win. So, and I'm thinking it's so unfair that when I make losses, I bear the losses. Then the moment I recover my losses, then you tax me. It's not making sense to me. I just
How?
want to ask like,
What do you mean? If you are trading, you have
okay,
a trading book.
now,
You have a trading book. So
okay,
if you make a profit, you pay tax. If you make a loss, you don't pay tax. They're not taxing you daily. They're taxing you annually. So what they expect you to do is to maintain a book of accounts. daily or whatever that will show every day you made a loss or a profit. You're going to pay tax on the net, the losses less the positives. That's your profit. This is the
Okay.
portfolio.
Oh, okay. Now it makes sense. Makes sense. Thank you. I just wanted to know that.
Yeah.
Thank you very
All right.
much. Thank you.
Fantastic.
Thank
Bonafide.
you.
Hey, you're welcome. Bonafide, how you doing? Bonafide. Bonafide.
All right. So I wanted to ask them what effect will I have two questions. What effect will this have on Nigeria economy, particularly on price? Will it not inflict price of goods and services? And my second question is, um, would it be better for us to transact money through blockchain, like instead of transacting on crypto? And instead of transacting on our bank account, move our major money, then transact on blockchain. If we transact on EVM blockchain, we still be pay tax. We still be taxed on it?
Can
Thank
you
you.
buy Mama Put with blockchain?
It's hard.
Yeah, so why are you asking the question? You can't buy a map with blockchain. So whether it's on blockchain, you have to pay rent with Naira. Your landlord won't hear on blockchain. That's number one. So it's not practical to move everything on blockchain. Number two, I don't know the relationship between inflation and taxes. I actually don't know. If anything, reducing your taxes allow you to spend more, which is what the economy needs. So there's no direct relationship. That's an economic topic on its own, which we have to go into. But at least I've answered the other question, Bonafide, right? All right, fantastic.
Yes.
All right, let's get Chiamaka. Thanks, Bonafide. I appreciate you. Chiamaka, how you doing?
Hi, good
How you
evening.
doing?
Thank you.
Good
Yeah,
evening.
fine. Thank you. Please, I have a quick question.
Mm-hmm.
If your company pays you a bonus or a commission apart from your salary, will it
If
still
you
be taxed?
if your boss, okay, your boss pays you, okay, yeah, it will be taxed now. It's income.
Okay,
It
but
will,
they have paid your salary, and that's the commission from doing an extra work. Will it still
yeah,
be taxed?
yes. Yes, it will be taxed. If your company gives you a car to use to do trade, it will be taxed. If your company gives you a house to live in while you're doing trade, it will be taxed. If your company gives you a bonus in addition to your salary, it will be taxed. No vex.
Thank you so much.
Good. Let me write time, no vex. Yeah. Let's get Biodu ayorinde.eth. Biodu, hi, what's up?
Hi, good evening, Kalu. Thank you for this. So my question is, I have an asset on exchange.
Mhm.
So I use this asset to take a loan on exchange. Now withdraw this liquidity back to my Nigeria account. Am I
Mm.
going to be taxed? Because I still have a loan to pay back. Though I use an asset on the exchange or maybe on DeFi or whatsoever. I'm talking of crypto now to take
Mm.
a loan. So am I going to be taxed on the money, the liquidity being withdrawn, exchange back, into my
I,
Nigeria
I
account,
I get your question. Is it for a company or for an individual?
individual.
So there's no way you can file that transaction you just said now on your tax return. There's no way you can on your tax return for an individual. There's nothing like interest income reversal. There's nothing like that there. You see what I'm saying? For a
Yes.
business, there's something called you. Did you take a loan? Did you pay
Okay.
interest? Okay, file it here. But for an individual, there's nothing like that there. So even if you are correct that yes, you are supposed to get a tax break on taking a loan, it doesn't show up on your tax return for the personal. What shows up is your interest you pay for a house, prime residence, but there's no interest payable on a loan. You see what I'm saying? So my advice is if you are doing that as a thing, set up a company and then do it under the company because then when you take that income, it's income to the company, correct? But then you can write off the interest on the loan you've taken on the expenses side. So you just pay the net taxes on the net of that disbursement from a loan.
Okay. My last question is that for this new year now, the 2026 we are going into. So it means that by March 2026, we are meant to reconcile all taxes that happened um, January 2025 to December 2025, or
Mhm.
they are looking that away like, okay, this is a new tax regime whatsoever, and we are starting it afresh.
Mhm. Yeah, so by 2027, that's when you're going to pay taxes. 2027, you are going to pay taxes on the transaction that occurred in 2026.
Okay, so my question is that, so it means that everything that happened till December 2025, they are not looking into that apparently. So they are starting afresh from anything that happened between January 2026 to December 2026. We're starting to pay tax by 2027 by March.
That is correct.
Okay, thank you so much. That's my question. Thank you.
You're welcome. Yep. Let's get she's
Oh, okay.
warrior
Okay.
princess.
Thank you. Thank you so
Hold,
much, Kalu.
Am I
hold,
taking
hold
Sorry,
on,
it?
hold on,
somebody else is
hold up,
speaking.
Rivers. Rivers, hold up. Warrior princess, go ahead.
Okay, thank you. So I just wanted to clarify this passive income strategy. It talks about
Uh-huh.
profits of in respect of goods and services exported from Nigeria. Okay, so
Yeah.
I'm an online educator. Some of my clients are overseas and some are in Nigeria.
Uh-huh.
So the clients that I teach overseas, is that considered as an export and is that therefore exempt?
Yeah, it says, let me read what it says so we can learn together. It says dividend received. No, it comes here. In respect of goods and services exported from Nigeria. If you teach folks abroad, that's an export. So you have
Hmm.
to justify that. So I would be very careful in how I draft my invoices, so
Okay.
that it shows that that person I am billing is bringing money from abroad.
Hmm.
So if they are
And,
paying you, if they
mhm.
are paying you, oh, let me debit my GT account and give you money, I wouldn't take it. I would rather they pay me either through PayPal or through
Yeah.
my bank account in America, because it has to
Yeah.
come in through an official channel. So they
Okay.
can't pay you from abroad into your Nigeria. You know how the Nigerians will do, oh, I'll pay
Yes.
you Nigeria. You
Yeah.
can't accept that because you can't
No.
use that as an asset. Yeah, that's
Yeah.
what you have to be clear about. Yeah. Mhm.
Yes. Okay. And so that is therefore I can exclude that from my tax computations. Those
If you got
clients.
money. Yes,
Yes.
if you got money from a client, because it says in respect of goods or
Yes.
services
Yes.
exported from Nigeria and repatriated through official channels. That's what it
Yeah.
says. So
Yes.
if they buy your training program from Canada and
Yeah.
they pay you by sending money to through wire you money, they wire you money to
Yeah.
Nigeria. That's an official. Yep. Then that forms that dividend receipt. But you're saying dividend receipt from
It
investment.
says all
Or
profits, all
Oh,
the
good,
profits.
good. So
Yeah.
we are on the all the profits of
Yes.
a non-oil Nigerian company in respect of good. You are in the right path. It's just make sure the money is paid to you from
From
the
overseas.
abroad,
Yeah.
not correct.
Yeah. Thank you so much. Thank
Hey,
you.
you're very welcome. Thank you so much. You have a good one. What was the guy that was speaking? Usman, how you doing? Usman Lawal. Thanks for hopping in here.
Thank you, Mr. Carlo. Good evening.
How you doing?
Please, fine. Oh, I just want to make a clarification on this. Actually, I think my question is related to Warrior Princess, but my own is a little bit different. I am through AdSense. I'm a YouTuber, so I am through AdSense, and I don't know. I don't need a just general explanation on like
Mm.
money we receive through AdSense. How the thing with the new tax, all these things.
Yeah.
So
What what
that's what I want to.
what they are saying is that if you receive money from abroad and you
Mm,
bring the money to Nigeria through official
yes.
channel, then it's fine. You don't pay
Yes.
tax. That's what they're saying. So make sure the money is coming from
Okay.
AdSense
No, it's coming
via
to commercial bank, direct
through
to commercial, my commercial bank.
through official channel. That's fine. That's
Yes.
what I'm
Okay.
reading what the law is
Okay.
saying. Yeah. Uh-huh.
Okay. 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 I think that's just my question because that's what's actually concerning me. So that's my question.
Okay. Send my 10%, sir.
All right.
All right.
No
Let's get
problem.
Kenneth.
Okay, so
Kenneth, CK Digital. How you doing,
Hello, good
Kenneth?
evening, Mr. Kalu.
How you doing, sir?
I'm doing fine. Thank you very much.
What's up?
Can you hear me?
I can hear you, sir.
Okay. My question is,
because over the days, I will have seen people posting different type of information regarding the taxes. That if you can avoid personal income tax by registering an LLC company like that and that and very other like a freelancer now, is it advisable to register an LLC like a limited liability company, or we
Are
should
you
just leave it as personal income tax?
no? So are you doing business?
Like we are delivering services like
So are you
SEO,
doing
digital
business?
marketing.
Yeah. So are you doing business?
Actually, that can be self-employed. It's a business
No,
also, if
but
I'm
are you
correct.
doing? Are you engaged in a business?
None.
What do you mean none? So let me just give you. I don't know why you want to say. I don't know why you want to say I do this. If you are engaged in any business that you're going to get income, you should open up a business account because it allows you
Okay.
to deduct the expenses that you have used to generate that business. It makes no sense to do business, right, under your company name, under your personal name, because you
Name.
cannot deduct expenses under your personal name that are not those pension, life insurance, and you can't deduct generator money for your personal name, but you can deduct
All right.
generator money for your business. So once you are doing business, it's advisable you have a business registration and then a business account so you can track it. And yeah, I know it's hard, it's more expensive. You can do it in the enterprise's name. You will still pay taxes on your personal name, then pay the company. You can also claim those expenses. So even enterprises, you can still use that, but it's also going to be on the personal side. So look at it this way. If you want the expenses, you've got to register the company. If you say you are fine, I don't need the expense cloud back, then operate as your personal. They are both legal. It's not illegal to do it. It's just that you won't get those expenses.
Okay. Thanks very much for that. Because I see some information that these services are not regarded as professional services. That's
Mm.
why I'm a little bit confused. Then.
Yeah, but if you're a
All right.
lawyer
Thank
and
you
the
for the
rest,
clarification.
lawyers and professional people don't have the same. If you're a lawyer, you can't claim those things that we claim. You can't go and claim pension for as a law firm. They have their own specific thing that they can't do. But overall, if you are doing business, not professional business, then of course you have to register a business account. Yep. All right, Rivers. How you doing,
All right.
Rivers?
Thank you.
I'm fine. Good evening, everyone.
How you doing, sir?
Very well. Thank you for this opportunity and thank you for organizing this space. Okay. I have a business account. I had just registered my business and I've also opened a business account because when I had all of the tax stuff, so I just decided to, try to align myself with it. But then I also have um, personal accounts with different banks. What I'm asking is, if I get money, if I do my business with my business account, I'll be able to file for tax exempts and all of that, all the exemptions that go with companies. But then what happens if I earn through other means? Maybe I have other streams of income and I earn through other means and those money come through my personal accounts. Will I be taxed from other means of, other means of income, other means of, from the dividend he gets from his company? How are we going to strike a balance on that?
So I'm not sure what you're trying to ask the question to make it sound to support what you're doing. It's a simple thing. Any income you make will be taxed. Any income you make will be
Okay.
taxed. You then have deductions that you can avoid those taxes. I've given you the deductions. The space is called how to legally avoid tax. I've given you those how to avoid them. On the personal side, pensions, NHIS, life insurance, interest on the mortgage. You avoid them with that rent up to 500,000, 20% of your rent. That's how you avoid personal. On the business side, if it's expense to create the income for the business, you can exempt. We talked about also if you earn money from abroad and you bring it through official channels, you don't pay tax. If you buy collective investment schemes, you don't pay tax. If you export, you don't pay tax. Those are the things you have to work around. So when you start to ask the question, I'm doing this, I'm doing that, you are twisting yourself into a pretzel, right? Try to follow what they've asked you to do. If you have a business account, then you are going to pay tax on income that comes to an account. We don't tax transfers to your account. If you receive income to your bank account, it doesn't mean it's going to be taxed. It simply means it is income. That income, sorry, it just means it's a transfer. The problem is that the taxman sees that transfer. I will now ask itself, how can you get transfer of 1 million naira, but you say you're only making tax of 100 naira? So it makes them to ask questions. It doesn't mean every transfer is business. Someone could have sent money to your mother in quote, right? And it came through your account. It's not a business transaction. Or there was a legal settlement and it came through your account. Maybe you had an injury, you got a legal settlement. That's not taxable. But you've got to keep records and try to avoid, I have 3 accounts, I'm going to pay 2 here. If it's a business account, only business transactions. So personal account, only personal transactions. Yeah. Try to keep it that way, sir.
So, in other words, I will pay tax for my company after all the exempts, and I will still pay for my own personal account. That's what I'm asking.
If you make personal, you are not your company. So if you own your company, you are not your company. The income your company receives pays company income tax. When your company pays you a salary, you pay income on that income that your company has paid to you. Your company will deduct the salary it has paid to you. So let's say someone gives me a check and I give that check to my own company. My company will pay corporate income tax on that check, which is business income. When my company pays me, the owner, a salary, my company will deduct my salary from the business as salary to myself. I am not my company, I simply own it. So they are two separate people. Because you own
So
it
is
100%
that
doesn't
not
make it you.
same as double taxation?
No, it's not double
Because the,
taxation.
because the,
It's
because the company is paying tax after all deduction, and the company is paying tax. So if the company pays you, why pay tax from the money that has already been taxed by the government from a
no,
company?
you're not listening. It's a
Okay.
deduction. It's a deduction. If you own Rivers Company and your name is
Yeah.
Mr. Rivers, the check
Okay.
was given to Rivers Company. So Rivers
Okay.
Company will pay income tax on the Rivers income tax, Rivers Company income tax. Rivers Company then
Okay.
writes you a check to pay you a salary.
Okay.
Rivers will deduct what they are paying to you as salary from their income. So Rivers Company will reduce their taxes by paying you a salary. When you get
Okay.
that income, you will then go and pay to the government income tax for revenues you receive from Rivers Company. There's no double taxation. What Rivers paid, they deduct. What you earned, you also pay tax on. Eventually, somebody must pay the tax. You can't avoid it. The only way you can
That is
avoid that tax is to do what I just told you to do.
okay. So in summary, my company will file for its tax, and the money that comes to me, I also file for tax for personal income.
Perfect.
Wow. We don't enter, we don't enter one
It's,
chance.
I'm
And this
not
guy.
sure if you're not listening to what I'm saying. It's not double taxation. You are only paying one tax. Many Nigerians do business with their personal name. If you do this with your personal name, you're going to just pay personal income tax. If you do this with your company name, your company receives that check. You can go to that company and say, okay, my company, give me a check of so, so, and so. That company will give you that check as income. Your company will write off that payment to you as a cost of doing business. So your company will not pay the tax anymore. Who will pay the tax? You, because you have collected the money. So it's not double taxation. You are simply shifting who the ultimate taxpayer would be. That's all you're doing. All right, Rivers, let's move on.
Mm,
Let's get BO. I've got enough of
it's
Jojo has
okay.
already answered.
Yeah,
Thank
please,
you.
Carlo,
Thank
let me
you.
just ask the last question so that I can run away. I know I'm back again. Just want to ask one very technical question on your avoidance. Um, I want to ask, if my company was separate from me loans me money, is it possible for a company to loan an individual money?
Yes.
Okay, if that is possible, and you earlier said that if the loan is not paid back, that could be written as a bad debt, right?
Yes.
So if I run a company and I loan myself money, okay, if I'm the receiver of the loan from my company, do I pay tax on the loan received?
No, you pay tax on the interest you are paying back. The loan is not income to you, right?
All right, so okay, that's fine. That looks perfect to me. That's a very big way to avoid.
Hmm.
All right, that's fine. Thank you so much. I think I'll make use of.
Just so people don't get confused. If you do that, the taxman is going to come up your ass because they're going to be. You cannot take a company and take all the money of your own company. That's what they call same party transactions. It's not. It's not. It's not at arm's length. You cannot buy your own house at 1 naira and say, "Oh, the house is worth 1 naira. I won't pay tax," and they won't agree with that. So keep that in mind. When you do a transaction, it must not be personal, or it must not be tainted by your own personal beliefs. When you borrow money from your company, it's not arm's length. So in America, they are very, very clear. The IRS would impute interest and charge on that transaction. If you sell the house to your son and you give that house to your son at a below market price, IRS will charge you at the market price and ask your son to pay that as taxes to them. So be very careful about trying to do these transactions. They're not you can't deceive them by saying, "Oh, I'm going to borrow
Yeah,
money."
I know. I just use myself as the example. Of
Just be
course, you could loan
careful
from.
because you're asking me yes or no. I'm answering yes or no based on what
All right,
but
that's
I'm
fine.
but I'm
That's
telling you, be careful. They look at this transaction. If it's not, if it's a same party transaction, some rules do come into play there. You can't borrow money or say a house is worth 1 naira, then buy it for 1 naira and then pay tax on 1 naira when the house is worth a billion. Mm-mm. It doesn't work
all
that
right.
way.
That's fine.
Yes, sir.
Thank you
All right.
so much.
You're welcome. Obina, hi. Obina, what's up? Obina Ukweze. Obina. All right, great. Let's get Mike. No, no, Mike. Gangs of London.
Yes.
Gangs of London. Hey,
Yeah,
how you
can you
doing,
hear
sir?
me?
I can hear you, sir. Please go
Yeah,
ahead.
thank you very much for letting me in. I just have one question, and let's assume you live abroad and you have account, maybe a sibling or your father. You regularly send money to your father to buy your property. What becomes of that account in Nigeria? I mean, will like in my own case, will my father will be taxed?
No, say it again. Sorry, say it again, sir. Just so I understand where you're going to. Start
Okay,
from the top.
so I regularly buy properties in Nigeria, but I send the money to because it's my father that normally makes the purchase. So I'm asking, will the taxman see the cash inflow in my father's account as a taxable income?
You're jumping, sir. You're jumping. So who is buying the property? Whose
I
name is buying the property?
is
You are who?
is in my name, but it doesn't go off from my account in Nigeria account. It goes off from my father's account.
So your father is buying who has the title of the property?
Me.
So okay, so you have a company and then you have a third party giving you money to buy the property.
No, that's not the scenario. Okay, so now I'm saying, assuming you live you live abroad, okay, and you want to buy a property in Nigeria. You don't. Let's just assume you don't have Nigeria account. You just want to make that purchase through someone's account. In this case, your father's account. If you say you send like 30 million naira into your father's account, and then your father buys that property in your name, okay. So at the end of the tax year, will will the bank or the taxman see the cash inflow into your father's account as a taxable income? Do you
No,
do
but
you
it's not.
understand?
It's not. Yeah, I hear you. It's not income, right? It's just a transfer. It's not income. So the money came in to buy something. It's not income. Your father didn't make any income from it. It
Okay.
was used to buy property. So when your father is filing taxes, your father is going to say, "I made income of 10 naira, B, the taxman will say, wait, oh, we saw 30 million come to your account. They will say, okay, Oga, come and explain this. He will say, no, no, that money was for someone to buy property. It's not, I don't recommend it. That's why I'm saying have your own transaction account. But you won't pay tax on it because you can explain what it's for. When you send the money from America, you put to buy house in Nigeria. That's what you put on the wire. The money got to Nigerian bank. That to buy money in Nigeria will be stored in the bank's wire instruction. Your father will also say this money is to buy a house in Nigeria. That's why you have to memorize your transfers. So when your father if your father does not file taxes, the taxman can say, okay, you got 30 million. Come and pay tax on 30 million. But when you file tax, you say, I got tax of 10 naira. Okay, but there's when they print because in America, again, they print what's called a 1099 that would show the interest you have earned on your bank account. If they do that, they can tell that, okay, this money was, you earned that interest on that or you did not. But the point I'm making is this: as long as your father files income with the correct narration, if the money is not for him, because the title of the property is not his,
Mhm.
right?
Yeah.
The title is not his. Then why would he pay tax on that? But I don't encourage you to do that.
Okay.
You can
What do
open
you
up your own
advise?
account. Buy it directly. Why are you paying to the account? Doesn't the company have money to have an account? Pay to the company that has the property.
Okay.
Because the owner of the property has to pay tax. The owner that you are buying the property from is the person that's going to pay the tax. The yeah.
Hello.
All right.
Kalu.
Thank you.
Somebody, so let me just answer YouTube real quick. Clarify if this tax is on income or turnover. The law says turnover. Sorry, the law says, what does it say for business? Jeez. Turnover. It says turnover. They didn't say mention income. They said turnover. I don't know what turnover means, but they said turnover, not income. Turnover. What about remote workers? Can they claim to export their services, and since they are paid in FX, do they need to pay tax on this income? You know, we just talked about this, Mr. AJ. We said the law does not say income. The law says if you get dividends, rental, royalties, that's when you are going to pay the tax. So we're assuming that you'd have to take that income you earned abroad and then convert it to passive income. And when that passive income comes back to Nigeria, then you don't pay tax on it. That's what we assume because the law does not say salary, it says rent, royalties, dividends. So that's just the answer of going to what is written in the law. Then Ola Nigeria says income on exports are tax exempt. But is exporting talent inclusive? Yes, if you export talent because there's royalties there, it's also tax exclusive. How do individual consultants calculate their expenses before calculating taxable income? The same way, take an Excel sheet, put your income, put your expenses, the net is what you're going to be taxed on. If you don't know how to do it, hire a consultant. Go to university, all those NDU students that do accounting, ask for the best student, bring him and say, do my account for me. It's a small business. He can do it for you before lunch. Pay him money. He's a student. He will love you. So don't try to do your taxes by yourself if you don't know how to do it. All right. Obina, hi. Obina, you got the floor.
Okay. Thanks a lot. I just want to make a few contributions to some of the questions that I've heard. I'm ex FIRS
Fantastic.
on
So
loans.
FIRS. Oh, go ahead. So I have my own question, but go ahead, sir.
No, you cannot. On loans, if I am checking your audited financial statement and you tell me that, oh, this is a loan, the first thing I'm going to ask you for is the contractual agreement. If you do not have a contract, it is not a loan. If you do have a contract, I will ask for stamp duties on that contract. So you cannot just wake up and tell the taxman that, oh, look, I gave myself 20 million naira loan. If you did that, where's the contract? If there's a contract, where's the stamp duties payment on that? If not, I'm not
Wahala.
allowing it at all. On taxes, somebody said, government is going to look away on 2025 taxes. No, there is a law that is currently running, and you would have to abide by that law and pay taxes based on that law. 2026 new law is for the year 2026. So it starts
So
running.
he's asking. So to be clear, sir, he's saying that this new law will start from 2026. That means that they will not use this new law for 2025 income. That's what he's asking.
Yes, for any transaction that's happened in 2025, this new law would
Perfect.
not apply to it.
Okay.
So nobody's discarding any transaction that has happened in 2025. You still have to pay taxes on it.
Okay.
Then on loans, like I said, if there's no contract and there's no stamp duty payment, it's not a loan.
Fantastic, fantastic. Obina, what about this issue of if I earn money abroad? The law doesn't say anything about salary, it's saying royalties, dividends, rent. Is this inclusive of salary? If I bring my salary back, is that tax exempt or it has to be the dividend, royalties, and all that?
What I understand is if you have earned any wages, any income, let's say wages, what the law is saying is which is higher, the income you paid there, that's the rate you paid there, or the one you're paying in Nigeria. Whichever is higher is what Nigeria is going to take. If the one you're paying there is lower than what is applicable in Nigeria, then the difference you still have to make that payment in Nigeria.
I know, but is salary inclusive? So you are saying that whatever salary is, that's the law on the salary side. This thing doesn't apply. This passive income that says dividends is not going to be applicable on that. There's dividends, there's interest, there's rents, there's royalties derived outside Nigeria. So not salaries, has to be dividend, interest, rent. That's it, full stop.
Yes, that's my understanding.
Okay. All right, all right. Obina, don't go anywhere. I'm sure many people will ask. Just stay right there. Don't go anywhere. Many people will have questions for you. Michael. Hi, Michael Kingsley. How you doing?
Hi, good evening, Kalu. Thank you so much for this platform. I've been enjoying it. Thank you.
You're
And I'm
welcome.
joining for the first time. Yeah.
Oh, nice.
So I have two questions very quickly. The first one, I listened to your the explanation on exports.
Yes,
So
sir.
exporting products and services. So in my case, I run an IT firm, and uh, I think all my clients are abroad. I don't really have clients in Nigeria. So I'm a web developer and I render all those services. Now, I receive payments here, but I have a corporate account that I use to receive payments. So what I want to know is when they pay me from there, because they pay directly into the corporate Naira accounts, they use either Lemfi or World Remit and stuff. So they use it to make the transfer directly to the corporate account. So what I'm asking is, am I going to be taxed on this, or I need to go and open a domiciliary account? I don't know if you get what.
Based on what I'm reading, it's saying non-oil exports, goods and services exported
Services.
from Nigeria and
Yeah,
repatriated through official channels. That means that the channel has got to be official. So if
yeah.
Lemfi is official, you are fine. What you need to do is to go and clarify that the
Okay.
Lemfi is an official channel.
Channel.
Because yeah,
Okay.
the point again is that if they pay you locally, that's where I think you're going to run afoul. If they say, "Oh, we have a Naira account, and we're going to pay you Naira account to your Naira
Oh,
account," that's where I think you might run afoul. The government wants remittances. That's what they're giving
yeah.
this tax break. So if they're just paying you from Nigeria, it's not a remittance from abroad. They don't. There's no dollar moving. So that's why I
Mm-hmm.
think they would not give you that tax break. So I would say number one, clarify that the Lemfi or whoever you're using is a approved channel, and then number two, make sure that it's not coming locally. They can't pay you. They can pay you Naira from
Okay.
there, so they will send you to their to their bank, and the bank will pay you, but they can't pay you from somebody in Nigeria will give you Nigeria. No, it's not a remittance. Yeah, that's what I would say,
Mm.
sir. Yes, sir.
Okay. Okay. That's well understood. Thank you. Um,
Fantastic.
so the second question is about my farm. I have a farm, and I just registered it this year, and I also have a corporate account on it. But I think I heard that I was at the FIRS office, and they said as long as I'm not going into branding, that if I process and brand, then I'll pay tax. But if I'm not branding and I'm just processing raw and selling like that, that I won't be taxed. So I'm now trying to ask, if I use the please, I'm just asking this question just for clarification. So I'm not trying to do tax evasion. So if I use the agricultural account, mostly for transactions in order to avoid tax, is that illegal or is it allowed? I just want to know
So
that.
so first of all, Michael, there's nothing like an agricultural account, right? They don't care what you target. I think what they care is it receiving inflow? Remember,
Inflow.
inflow is not income. Inflow just
Mm,
allows them to see what kind of transactions you are doing. So look
you're
at how the
doing.
FIS, Obina is here. FIS will say, wow, you have an account that's receiving a 1 million naira every month. Okay, you can't come tomorrow and say that the total tax from that account will be like 1K. They want to know more. It doesn't mean because you get a million, you pay tax on a million, but they want to know more because 1 million to 1K is very, very wide margin. So
Yeah.
they don't care whether you call it agric or non-agric. It's
Mm,
an inflow, right? It gives them an
inflow.
insight into what you're doing. Let's now go to the agric sector. If it's a brand new farm, 5 years, no tax, end of story. If it's a
Yeah.
farm that is now in existence, even if you brand it, even if you brand it, you can expense away the expense in on that farm. You can expense it away, even if it's
Oh.
branded. I think what they are talking about is VAT. Obina can correct me. VAT, because VAT on raw agric is tax exempt. So if I have corn, I don't pay VAT on corn. But if I have corn and I put it in maybe I take that corn, make it into corn in cans in
Mm,
supermarket. Supermarket will
mm,
charge me VAT on that corn I've packaged and labeled. I think
mhm.
that's what they are going to.
Yeah,
But
that's correct.
as a rule, as okay, yeah, Obina, yeah, so that's where they are going to. It's not really if you brand, if you make profit, expense the profit off. If you buy generator, expense the what? If you brand your corn as Emmanuel Michael corn, that's fine, expenses off. But if you take the raw corn, VAT is exempt. But that raw corn, you now go and package it, put it in can, put one nice picture there. Then
Mm.
yeah, exactly. That's what
Okay.
I think. But I
Sorry,
don't
please.
think.
I want to
Yeah,
also
go ahead.
add,
Yeah.
it doesn't matter what
Okay.
you do with your agricultural account, you can receive any transaction. As of the time I left, we have access, you can request access into any company, and the CBN provides you every single transaction that has happened through that account and to who.
Mm.
So it's just that the
Okay.
taxpayer is not
I'm
really interested in following
I'm
up the case.
I'm laughing my evil laugh because
I,
I'm just telling people this, right? Mr. Taiwo was the person that was defending the private sector, i.e., he was giving the private sector loopholes on how to avoid tax. So it's very, very, it will be hard for you to bring something that he hasn't seen before. So I prefer you. That's
mm,
why I'm doing this space. I want you to have the legal ways to avoid tax. There are so many things online that are just nonsense. Oh, I'm going to open. No, they're going to find you out and they're going to basically so this is better for you understand where the law works and try to work with it. So YouTube guys, I'm so sorry, we have a storm. I think it's affecting the quality of the internet. What I'm going to try to do, I'm going to try to re-record this whole presentation and put it again on YouTube. Think it's breaking off. It's because of the storm and Twitter is staying strong, but the thing I'm getting the errors on it. So try to yep, correct. Sorry about that. So go. Let's get K
okay.
Bytes.
Thank
Yeah,
you.
Michael,
Thank
thanks so
you
much.
so much.
Let's get
Yeah.
go Michael.
My last question is on
Real quick, real quick.
sorry, the limit on corporate account. I've forgotten the figure again. The personal account is 800,000 for corporate account. What is
150, it's 100 million before you would now be considered a small company. But there's 50 and 100. Mr. Taiwo said it's 50,
okay?
it's 100 million. Yeah. So if you have
Okay.
that 100 million on the asset side ahead, then you're now clarified as a small company, correct? Yeah.
Okay. Thank you so much. That would
So,
be all. Thank you.
also what most people do not do is compliance. Whether you earning anything or not, you must always file your taxes.
Good.
If not,
Good.
the taxman
I'm
is going
telling
to
you, I'm
raise
not
interest and penalties for not filing
good.
your account. Filing is not payment. File it first, then payment is another story altogether. If you also change your business
Perfect.
address, you must inform the tax authority. If not, you're paying interest and penalty on that also.
Yeah, I've said that over and over. Please, guys, you've got to file. Even if you earn 100,000, you've got to file. That's how you avoid it. NASA, let's go ahead, NASA. NASA, what's up?
Hi,
Yeah,
Kalu, I
good
thought you
evening.
said I should speak
Oh,
next.
sorry.
Please, where's
So,
my
I'm so
phone?
sorry. K-Byte, sorry. I apologize. K-Byte, NASA, be online. K-Byte, go ahead.
All right, so it's good evening, everybody. So, is this question about? And then I think when the last person asked the question, you said the country is concerned about remittances. So, if in my own case, my company pays directly for my service,
Where's your
um,
company?
or no, the company or my client abroad pays directly for my service to my Nigerian domiciliary account.
Yeah.
How does the new tax framework affect that kind of
Yeah,
payment?
that's the person they are looking for. If you that means that income is, again, it does not say salary. It says no, it says services exported. Yeah. So that means you are exporting a service. So, but again, profits, I think you are covered. Obina, please back me up here. It is saying profits of any non-oil company in respect of good or service exported from Nigeria and repatriated. So profits are also covered. It doesn't have to be a salary. That means, okay, you have to do a company, and that company you bill them. Then when
To my DOM account. That's why I'm asking.
yeah, try to do a company so that it's profit. So just so that you are in line with the act, because it's
Okay.
saying profit of a non-Nigerian company, not individual. You see,
Oh,
the language is saying profits of a non-oil Nigerian company in respect of goods and services exported from Nigeria and repatriated. So you have to be a company, not an
mm,
individual.
okay. Okay,
Tracy,
then yeah, then this should be a two-part in that case. So in that case, if I have my company registered and they pay to the company's domiciliary account, if
uh-huh.
I now move money for my personal upkeep or stuff, would that now
That's fine.
be
No, that's fine. So look at it this way, right? The money that has come into you is already is tax exempt. Is good. You can do whatever you want with it. You're fine.
thank
You
you very
follow?
much.
Yeah, but it has to be a company, not individual. Company.
Okay, but if it's an individual, will that be taxed?
Yes, that's what it's saying here. So I'm trying to follow the language explicitly on the law. The law
Mm,
is saying the profits of a non-oil Nigerian company. So go and open up a company, brother. Simple. Go and open up a company, right?
thank you
K-Bait,
very
go and open up a
much.
company. Yeah, you're welcome. Montero, how you doing? K-Bait, thanks so much. Montero, what's
Hello.
up?
Good evening. I'm fine. How are you?
Very well, sir.
So, the thing is, I want to ask a question based on this VAT. So,
Yeah.
I want to know if my company, because what my company does is I do recycling, plastic recycling. So, I want to know
Okay.
if I will be paying uh, VAT, both
Yes, you.
to the people that I'm buying the waste plastic from and the people that are will I be charging VAT to people that are buying the processed plastic from me?
So what they are saying now, sir, is that if you pay the VAT to the people you are buying plastic from, you can write back that VAT to your account. So that input VAT is deductible. That's what they're saying now. So if you pay input VAT, you can deduct it, sir. That's what they're saying.
Okay, so can I decide not to pay the VAT?
No, if they ask you to pay, pay. But then have your records and write it back. Write it back to your income.
No, okay, what I'm asking is, majority of people I'm doing business with doesn't do any VAT
Yeah,
stuff. So I'm asking now,
so you don't pay them.
is it a must that I will be
Let,
charging both my customers VAT, or and I will
let
be
me give you a word of caution, right? There's somewhere in the act that says that you cannot charge an expense as a deductible if that expense did not pay import duty or VAT. What I would advise you as a business, VAT is the law. If VAT is supposed to be collected, I would say charge people. If the folks that are giving you input not charge you VAT, okay, they didn't charge you VAT. What can you do about it? But for you, keep your VAT records on time. That's what the law is saying.
okay.
Yeah, just be very
Okay,
yeah.
so
Montero, real quick.
I want to ask another question. Sorry, because so now if I'm paying myself, I want to know the better option, because this I thought I don't know much about all these taxes. It's just because it's this year that I'm putting interest on it. So I heard that there is company income tax and personal income tax. So if I'm paying myself a salary from my company, will I be paying tax on that salary and also be paying tax on my company's profit?
No, no. Let me just try to explain again, Montero, just real quick for you, right? If your company makes 1 million naira, your company has made 1 million naira, your company is going to pay tax. Stay with me. Let me mute you.
Yes.
You have lots of background. If your company receives 1 million naira, your company is going to pay tax on 1 million naira. Fine. Now, let's say your company pays you a salary of 900,000 naira. What will happen? Your company will write off that 900,000 naira as an expense to the company. So your company will only pay tax on 100,000 naira. You that received income of 900,000, you will now pay personal income tax on that 900,000. Does that make, do you understand what I just explained, sir? Montero, is it clear?
Yes, I understand it
All
now.
right, perfect. Excellent. All right, let's go to NASA. NASA, go ahead.
Good evening. Thank you so much for this opportunity. I would like to ask three questions, and I'll make it quick. First, I do music, and I also earn royalties. And also, currently, I do not reside in Nigeria. I spend less than 90 days in Nigeria, and the music is being produced in Nigeria. I come back home, do my recording, and then I go back. I don't spend more than 90 days. Then, basically, I get paid royalties, and these royalties go back into my dorm account in Nigeria. Do I get taxed for it? Secondly, if I am repatriating funds from here,
Let's do the first one, NASA. So
okay,
you earn the income in Nigeria.
no. I and it's worldwide. My royalties, my mechanical,
Yeah,
and also my publishing royalties.
what about Nigeria now, not worldwide? So do you earn any income from Nigeria?
No,
So then you don't pay tax in Nigeria.
yes, I don't pay tax in Nigeria.
So end of story, right?
Okay, but these funds I repatriate them basically back to my dorm account in Nigeria. Do I
Okay.
get taxed for it?
No, it's a transfer. It's not income.
Okay. Then, secondly, I also work here, and at the same time,
But yeah,
I'm
but yeah,
also
but yeah, you're moving away very quickly. What's the money doing in your DOM account?
just savings. Is a savings
So who
basically.
spends it?
Sometimes I send it to family or as I wish.
Okay.
Yeah. Then, secondly, this one is my own income from my job and all that, and I send it back home for also savings. Do I get taxed on it?
No, because we said if you send money from abroad,
Mm-hmm.
dividends, interest, rent, royalties. This is not a
Okay.
business. They don't
Okay.
tax you. What we're not clarified is salaries part of dividend, interest, rent, and royalty. That's what we
Mm.
don't know. So if,
Okay.
for instance, you took your salary in America
Yeah.
and you bought a certificate of deposit in America, and
Yeah.
the city paid you an income stream, and you send that income to Nigeria, then you don't get taxed on it. But
Okay.
that's dividends, interest, rents, or royalties. They
Okay.
didn't say salary. The way they talked about profit is on if you are exporting goods and services. But in this case,
Oh
you are
yeah.
renting.
Okay. Lastly, because this is also as regards sending money to, because I'm considering my parents, they are aged, and
Okay.
sending money to them to their accounts directly, do they get taxed for it?
If you send less than 800,000 to them, they don't get taxed as a whole. If they are aged, retirees also do not pay tax on retirement income. So if you are sending upkeep allowance, retirement income, how old are your parents? Are they more than 70? Are they how old are they?
My parents are not more than 70, but
So,
they are both retired.
so their parents should file a tax and say they got money as upkeep from their son.
Okay.
So they would file that they received that money, but they're not going to pay tax. But that money is not, it's not income to them. They have to still file it. But
Okay.
they received it. But 800K, they're exempt and all that. So these are gray areas that the act is not very, very clear on. Because like in the abroad, if you are a certain age, you no longer pay taxes. I don't think we have it in Nigeria. They just stopped at the income of 800K. I'm sure they would amend it as we go along. But at a certain age, they shouldn't be paying taxes. I know if they receive a pension, they don't pay tax. But if someone receives money from his son abroad, 10 million naira a month from his son abroad, does he pay tax? The tax law is not very, very clear on that. That's what I'm saying. I'm trying to just stay on the minutiae of the tax laws. It's not very, very clear if they'll pay tax or not pay tax on that.
Yeah, that's the area I'm most concerned about, because probably I send 1,000 US and then boom, they get taxed for it.
No, I would narrate it properly. Narrate it properly as welfare payment, income, welfare payment to my family, or medical expense to my family, because medical as well. Upkeep allowance, food, medical upkeep allowance to your parents, and send it to them. So let that narration be there. Yeah, that's what I will say. Yeah.
Okay, thank you.
All right, Nasa, thank you so much. Shego Olani, how
Yes.
you doing?
Yes. Hi, Kalu. Thanks so much. A couple of my questions have been answered, but let me just reiterate.
Okay.
I do have an
Okay.
LLC and I export
Uh huh.
software services. The only
Uh huh.
incomes that come into the corporate account is exclusively from this export. When I'm
Uh
filing, and I move all of the money out as well. Just it's in and out is exactly two transactions monthly, just like that.
huh.
If I'm filing, how do I file do I say that there's no profit, or how does it look like to say that these are exempt from an
No.
export
You,
point of
you,
view?
you, your accountant will file everything for you, and you won't pay tax. Your accountant will file income. Income is there's income, but there's no taxable income
Okay.
because the law is saying that any profit of any non-Nigerian oil company, that's if you're not in oil,
No, no,
you're
no. It's in
non-oil
software
sector.
services. So
Good. And you export goods or services and you bring the money back through official channels. That income is not taxable. So you file a receipt income. What's your taxable income? Zero, because that income, according to law, is exempt. That's what you file. File, correct. Yeah. If you don't file, then they're going to tax you on that income because you haven't told them that income is not exempt. You said that the IRS
I
man was
see.
here,
Thank you
right?
so
The
much.
guy that was here. Yes. Yeah.
Yeah,
All right,
thank you. I have a
perfect. Yeah,
second
sorry
question.
about it. So, real
Yeah.
quick, go ahead.
Yeah, sorry. Then when the money comes into that corporate account, it also moves to, let's say, an investment company account. It moves for investment
Yeah.
reasons. Is there any gray areas in
Yeah.
that dimension, or not?
So you see, in America, they have what they call basis. If money has come in, it already has a basis. In Nigeria, it's not really, we don't have basis. So that money that you brought in has come to Nigeria. it's now tax free. If you take that money and invest, it should also be tax free because taxes have already been quote unquote paid on that income. You see? So it should, when you buy assets, you shouldn't pay any tax anymore because that income is coming from taxes. So what I would advise you to do is to keep proper records to say, when I bought this tranche of investment, this money came from this income that I earned from exporting goods and services. Show them the paper trail.
Okay.
Show the paper trail. I exported ₦1 million worth of services to America. I got paid ₦1 million. I used this ₦1 million to write a contract note to a stockbroking firm so that everything is now tax free because that income has already been taxed. Where you feel is if you don't have paperwork to justify this transaction, then they will say, no, 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 we don't agree. This money came from your income in Yaba, blah, blah, blah. But if you have the paper trail, fantastic. So I will create, just like you said, any transaction, name it, just name it. So you can see, they can see where the trail is coming from. If you do investments outside this American type thing, do it on a separate CSCS.
Okay.
You see what I'm saying? So if I sell exported goods. I use the money and I buy stocks. But I also buy stocks from my Nigerian income. I will separate both CSCS.
Okay.
I will just separate them just to avoid wahala. So that I'll tell the FIRS, this CSCS is for me when I do Nigerian things or my normal stuff I buy here. Remember that CIS schemes are also tax exempt. So if you buy mutual funds, if you buy ETFs, they're also tax exempt. So the way you want to lock this thing down, if you want to lock it down completely, is to say export, bring the money back, they use that money and buy a collective scheme, then you've locked off any taxes whatsoever. You only pay the tax now, or you only expose this to potential taxes if you buy an individual fund. If you buy Dangote cement singularly, then they might ask you a question. But if you have paper to say, I bought this from the money I used to export to America, then of course you're home dry.
Okay. Thank you very much, Kalu.
Fantastic showing you. Hi. Let's get Quay. Hey, we got to run down. Quay designer, QUE designer.
Good evening.
We have to run down. Yeah, hey, how you doing?
Yeah, it's Q actually. Q.
Q, I
Yeah,
apologize.
yeah. So quick question. I just want to ask if inheritances get taxed. So,
They
cash
don't. They don't.
inheritance.
They don't.
Okay. So, like, if your parents, your pension from your a deceased person gets into your account, you don't tax it.
Life insurance, inheritance, gifts are non-taxable, correct?
All right. Thank you. That's all.
You're very welcome. Man. Yep, you got you. Let's get Ikechukwu. Ikechukwu Okori, how you doing?
Yeah, good evening, sir. How you doing, sir?
I'm doing very well. Thanks for asking.
Okay, so I have a few questions. While we are still looking at whether altered or whether it will come into play or not. Now, I have for this parents thing. Now, if you have, like you talked about gift, if you are would they need to file and would that be taxed?
all
That is
in,
one.
all income has got to be filed. All every whether you earn income, you don't earn income, you have to file. You file and say I got zero income. If your son gives you money, you file and say I got a gift from my son. You're not going to pay tax. Filing doesn't mean you pay tax, but filing means that you are reporting your so that this and I got this income. I'm letting you know it's not taxable. So they have to still file. Yeah, they won't pay tax, but they have to file.
Okay, sir. So for another thing, now you work for a firm or you work with a company, and now you have a car loan which they deduct part of your salary before remitting or paying you what they in quote have to pay you. Now this is between you and the company. How should the face of this be now in terms of the tax? And as well, if you have, let's say, an LLC where you are using that your loaned car or the car that is on loan to work, can you make deductions of the expenses you do on that car too?
As a business or as an individual?
as a business.
Yes,
Because
yes, you can.
now, in the face of the company now, that is where you work with, and the car loan is to be deducted before your payment. But let's say, for instance, your total pay is 250 and you pay monthly car loan of 50,000 and your take home now becomes 200. So it's your tax now. Would it be calculated on the 250 or on the 200?
On the 250,
So for a car loan, there's no reprieve for you.
it doesn't matter what you call it. There is no the only loan that they are giving you reprieve on is a mortgage loan. That's for the individual. The only reprieve you get on the individual side is the mortgage loan. That's all they're giving you reprieve on. Everything else, you're going to be taxable on that. Benefits in kind are income. Benefits in kind are income. So if your company gives you a house in Ikoyi to live in, right? That's also taxable to you as income to you. So
Okay.
the only thing there is going to be mortgage. If you are paying interest on a mortgage, you can claim that. Every other loan is not claimable.
But now when you use that car now to work for a company you
But
probably
I
own,
asked you individual or company. You said company, but the car
yeah,
is
for the
on.
company, you can
But
write off that,
but the car is on.
the
But
expense.
your question, yeah, the company will write it off as a cost of doing business. So the company goes and gets car hire and is paying lease or whatever payment, the company can write off that lease payment as cost of doing business. The company can, the individual cannot.
Sir, but what in a case where you own that company, do you own the car, but you are using it to do the
So
company's
you are asking a
business?
question to get a different answer. The company can, the individual cannot. All right, the company can. There are two different people. There are two. Don't. They are trying to ask the question. Maybe. Oh, no, no, no. If you own a car and you are paying interest as an individual, you can't write it off. The company can own a car and write it off, i.e., the interest payment, the mortgage, or the company
No,
can, but not the individual. It's pretty clear.
no, sir. I'm now saying it's not the company now that owns this car. Let's say this company like is a different entity,
Ikechukwu,
but you, the owner,
Ikechukwu,
probably owns a vehicle. Yes.
the individual cannot write off any loan apart from mortgage interest. It's a simple full stop. Any other
No, I get you, sir. What I'm just probably get what I'm trying to say, sir. I'm saying now, this company he doesn't own this car, but this individual owns. So if the person uses this car now to do a business for this company, he's not writing it off. Can the company write off that expense that is incurred on that car?
how can a company write off an expense owned by a by a person? What's the connection? Again, you're trying to ask a question to get an answer that you like. What is the connection between the company and the personal owned car? What's the connection? None. So if the company owns the car, yes. If the individual owns the car, no. It's you can't change the answer by asking. Ikechiko, I hear you. You're not going to get a different answer. I didn't write the tax law. So let's move on. Are you good?
All right, thank you.
Sorry about that, sir. Professor Incredible. How you doing, sir? Professor Incredible.
Yeah, good evening, Ikechukwu. So I say Ikechukwu, sorry, good evening, Kalu. Kalu.
How you doing,
If
sir?
Ikechukwu, well, I'm good. How are you too, please?
Fine.
If Ikechukwu wants to get his expense, he should charge his company. If he's using it for company job, he should charge them. They
Simple.
should pay him. Yeah. So,
Simple.
yeah, I mean, I heard you speak about repatriation then investment. So
Yeah.
you repatriate money as an individual into your individual account. You are not
Yes.
paying tax. But when you
Yes.
invest, I'm investing in a company like Dangote. I mean, I needed clarity. You're paying tax on that?
No, so what just let's be very, very clear. If you are an individual and you are repatriating money that comes from dividend, interest, rent, or royalty, then you don't pay tax on that. They did not mention salary. So if you work for Facebook in America, the salary from Facebook, they didn't mention it. They are saying if you take your salary from Facebook and you buy US Treasury bills, and US Treasury bills pay you an interest, that interest, you bring it to Nigeria, you don't pay tax on it. But for a business, if a business exports and gets income and it comes through official channels, it also does not pay tax on it. So two differentiations: individual, dividend, rent, royalties, and interest. For company, it can be anything as long as it comes through your approved channels. Yeah.
Okay. Now, again, just for clarity, because now it's clashing with something I had read somewhere. So, as an individual working abroad, earning salary and you are being taxed abroad, let me just, you're taxed abroad on that salary. So you're saying if I repatriate that salary to Nigeria, Nigeria can, when probably these two countries already have tax treaty, you cannot do double taxation. Nigeria can
Well,
tax me for that money.
you're asking two different questions. You asked me the first question, you didn't mention double taxation. If you have a double taxation treaty, then the treaty would suffice, not the tax
Okay,
law, right? That would be
okay,
that's a
okay,
difference. So
okay,
if your country has an agreement with France that says if you work in France, you don't pay tax, then you won't pay tax. And that end of story. But the law
okay.
is saying dividend, interest, rent, and royalty. It didn't mention
So,
salary. I suspect salary is included, but it didn't mention, so I don't say it mentioned.
okay, I get you. So that scenario I've painted now,
Mm-hmm.
that okay, double taxation treaty, blah blah blah. If I repatriate that money and I invest in a Dangote, am I going
Just
to
pause.
pay?
When you repatriate the money, then you've already paid tax on it. So it's fine. You've already paid tax on it. You're not going to avoid the tax. Double taxation just simply means that if you pay tax in Canada, you've paid tax in Nigeria. That's all it is. So you've already paid the
Okay,
tax. So there's no problem with that.
thank you. So
What they
final
are what
question.
they are saying, if you bring in interest income from America, it is tax free. That's what they are saying. But if double taxation means that you've already paid tax abroad, all right. So go ahead, sir.
Yeah, thank you. So final question. So I, as an individual that don't live in Nigeria, but repatriate money to my account for savings or whatever, or for family upkeep, do I have to file?
No, the way they define a Nigerian, it's very simple. You can be a Nigerian. First of all your income, if you are a Nigerian resident, not citizen, resident, any income you make worldwide is taxable. I repeat, if you are a Nigerian resident, any income you make worldwide is taxable. Let me give you an example. Joshua just fought on Saturday, right? Anthony Joshua just fought on Saturday. Anthony Joshua is a Nigerian and a UK person. Let's say he's a Nigerian. Does he spend 183 days in Nigeria? No. So the money he earned in Saudi Arabia will not be taxed in Nigeria. But let's say Anthony Joshua spent 200 days in Nigeria in 2026. If he goes to fight in Saudi Arabia, the income he makes in Saudi, the $40 million he paid in Saudi, he will pay tax on that income to Nigeria because he has spent 200 days in Nigeria. Or let's say Anthony Joshua does not spend a day in Nigeria, but maintains his permanent home in Nigeria, he will pay tax in Nigeria. Let's say he doesn't spend 200 days in Nigeria, does not have a home in Nigeria, but has huge investment in Nigeria, has a huge family here in Nigeria, he also pay tax in Nigeria. Let's say Anthony Joshua earns money in Saudi Arabia, and that income will not be taxed in the UK. Nigeria will tax him. So the residency is clearly defined. If you are a resident, they don't care about your citizenship. They care about your residency. If you live in Nigeria for more than 183 days, that makes you a resident. And if you're a resident, you then pay personal income tax to the Nigerian tax authority. Make sense, sir?
Yeah, I mean, very clear. But just, I just need to be clear. So as a non-resident but a citizen
Yeah. Mm-hmm.
living abroad, I mean, living with a country where there's a double taxation treaty, you only
Yeah.
repatriate money home, and the end of the year you don't have to file because you are not supposed to pay tax, right?
Correct. You will not file because you're not supposed to pay tax. Whoever you're giving
Okay.
the money to, if you're giving to an individual, that individual has to file. If you are buying shares, that company will do withholding tax receipt on that your investment. Yes, but you that's doing the remittance, you should be fine. If you qualify, if those other qualifications happen, yeah.
Yeah, thank you very much. Thank you.
Yeah, welcome, man. Yeah, let's get Awala. Hey, we got to go, guys. Awala Ruben. How long do we have? Hard stop is going to be, we have about 20 minutes and hard stop. Awala, how you doing? Awala Ruben is not ready. Yes, let's get Kingsley. Kingsley eBay.
Yes,
Kingsley
thank you so
eBay.
much, sir.
How you doing?
Uh, yes, so please, the thing I want to ask is concerning most of us that used to buy stocks with a margin loan. So I want to know if we are supposed to pay tax on the profits.
Yes, no. If it's profit, you pay tax on the profit now.
Okay,
That's a simple one now.
okay, what's like
Or are you trying to ask that because you made the profit to the loan, you shouldn't pay tax?
exactly, exactly. So that's why I
No,
just
you pay net, you pay profit on net income. Only
okay,
if you're a company. If you are buying shares in your personal name
okay,
and it is not a collective investment scheme, then you're gonna pay tax. Right?
okay.
That's a simple one. Yeah. All right, Kingsley. Good investing for you.
Thank you.
Awala Ruben. Hi, Awala. Are you ready to speak? Awala is not ready. Let's get Tobere. Tobere, okay. Tobere. Money, business, debt. Tobere, what's up?
Good evening, sir.
How you doing?
Yeah, fine, sir. Good evening, everyone. My question for sake of clarification, because I'm into tax a little bit because I'm a student of ICANN. I did tax since about 4 years or 5 years ago. So the new tax law, I'm not that familiar with it. So I've not written any paper on it. So my question is that I'm already a business owner. So for sake of clarification, what are these things that I can legally do that will not make me to avoid tax as a CEO, because I now run a business of food production. I
Yeah,
know
Tobere,
that.
we said maybe you were not here at the very beginning. We clarified those things that you have to do, and they are very easy to find online. There are about five of them.
Okay,
Number one, you have
So
to if
bad.
you pay for life insurance for yourself and your spouse. That's number two. Number three, NHIS and Nigerian Housing Fund. Mortgage interest, of course, is also deducted from your paycheck, from your taxes, and of course, rent. Rent is capped at 500,000, 20% of whatever your rent is. So these are all. If you just Google what are the tax exemptions, it will give it to you. We're just trying to add more color to these things. And like I said, the only thing that to me that allows you more, should we say, flexibility is the pension side, the additional voluntary contribution, because there you can do much more. You can do more and you can withdraw more after 5 years. So I would advise that you go back and listen to the recording, or you go online and just put this in there. It will give you just much more. Yeah,
all right. Thank you very much.
you're welcome. Let me get gentlemen. Is Zona Ichizona? Is it Ichizona? Did I get it right? Ichizona. All right, Ichizona is not right. Let's get Ephraim Ohazurike.
Oh, Hazurike,
Ephraim, hi.
yes. Yeah, good evening,
No vex,
Kalu.
no vex. Sorry, sir. How you doing now?
I'm very well. Thank you very much. Now, my question is, I have two questions. One is, I'm a gynecologist and I freelance. I don't have my own hospital. So
Hmm.
I get patient, I get referral because I have a special skill. I get referral, people refer patient to me, and the patient pay money into my account. I have hospitals that I use. So I pay the hospital, I pay my vendors, I pay everybody after.
Are you paying individual or do you have a business that you do this under a business?
No, I don't. The money comes into my personal account.
Okay, now so you number one thing you have to do tomorrow is set up a business for this activity that you're doing. Why? Because all the petrol you used to go from hospital to hospital, you can write it off if you have a business.
Okay.
So you have to set up a business tomorrow to do this state activity so that all your income comes to your business and all your expenses also go to your business. That's going to be the easiest thing to do. The rest, of course, going to be this your getting your open up a you have a pension account. You have to open a pension account, my brother. Open up a pension account,
I
life insurance,
actually,
all
I
that
actually
stuff.
work with governments. On the other hand, so I have my
Mhm.
pension from my salary and not the rest of them. That was the day I walked up to my PFA and I told them that I want to start making extra pay on top of my pension.
Uh,
And they were like, no, I can't do it because it has to be 7.5 from government, 7.5 from me.
yeah,
Something like that.
they don't know what they're talking about. So they go to a new PFA. You can make as much as you want. I think you can make up to one third of your income in addition to your account. So you can do an additional voluntary contribution. I advise you do that because it will reduce your taxable income above the line, which means that as a doctor, you should be paying a lot of taxes. But when you do additional voluntary contribution, you are bringing your tax income lower, not just expenses, you are bringing your income lower. So you definitely have got to do additional voluntary contribution. I think you should do that. So I would say in terms of order, go register a company tomorrow, go to your PFA. If they tell you the same thing, go to a new PFA, do additional voluntary contributions, then think about how you can also in your business capture all the expenses to reduce your taxes. That's what you should do, sir.
All right. So my second question now is maybe if Obina is still on
He's
the
left.
call.
He's left.
Yes.
He's
I
left.
want to know, is there any peculiarities? I heard that there are some peculiarities to taxation that goes to the hospital to a hospital because up till now Nigeria still treat healthcare as social service. That
But it doesn't matter. But it doesn't matter for you because you're not the hospital,
Yeah, so if I
and you
because the easiest thing for me to do is to set up an hospital.
you still
So
pay tax.
okay, the hospital still pays tax because
Everybody pays tax.
I have friends who own hospitals and they say that they don't pay tax that the tax that the hospital pays for the staff, the personal income tax of the staff there, that government look away from it because the Nigerian government
No, that's
treats healthcare social
no,
service sort of.
that's false. Especially going forward, everybody has to pay income tax. Yeah, everybody's going to pay income tax. So that's false. When you pay salaries, the hospital would reduce its taxes. Then the staff that receive the salary have got to go and file personal income taxes.
Okay.
Yes, sir.
All right. Okay. Thank
All
you
right,
very
Ephraim,
much.
okay, okay.
Yeah.
Okay, I'll let you go. You're very welcome. Yep. Let's get my senior father too, Mar Belenge.
Hello, good evening.
Good evening, sir. How are you doing today?
I'm doing fine. Nice speaking with you, Mr. Kano.
Same here, sir. How can I be of assistance, sir? How can I help today?
Okay, the question I want to ask, let me be very open. I registered my company since 2010, but to be candid, I have not paid tax before. So
Mm.
my question now, do you advise I continue with this company because I don't want to have issue with tax man, or I register a new company and start all over again and start on a clean sheet paying my tax and the rest of them?
Um, they give a tax, what's it called? Tax holiday or tax, when they give you like amnesty, they give a tax amnesty a few years ago. Maybe you should have taken advantage of that. But I suspect in my heart that if you start from 2026 and start to pay your real tax, they'll be fine. I can't of course guarantee that, but I would say start. If you think it's bad, set up a new company. It's going to cost you more money, but I suspect if you just start off on your own, they would accept that from you. So that's what I suspect. Yeah.
Okay, that is all I want to know because the fury of the whole thing. There is really tension
Mm.
everywhere, so everyone is
I
trying
know.
to tell you to make
That's why
amend
we
to
are
get.
doing this, Oga. That's why we're trying to give a lot of information because we can't say know it's not a strategy. You have to say know what is in the law, then now say, okay, this is what I can use to get around the law. That's what I'm saying. So we're trying to do this to help people that want to pay taxes. Exactly, sir.
Okay, no problem. I've heard you. Thank you so
Fantastic.
much.
You're very welcome.
Yeah,
Thanks so much.
yeah,
All right,
thank
so let's get Smart Pro piece, Smart Pro printers, Smart Pro. What's up, man?
Good evening, Mr. Kalu.
How you doing, sir?
Good evening, sir. Thank you for this opportunity and thank you for what you are doing to enlighten us about this tax law. My question is not much. I just have two questions. The first one is I don't know if you have already explained it because I actually came late before you've already started the live before I joined. So I want to ask if I receive a dividend from a share that I bought that I acquire from a
That I
company.
bought,
Will
that
I pay,
I acquired from a company.
will I pay tax on the dividend?
It has got to be. Hold on, let me mute you. You have audio. It's got to be a collective investment scheme to avoid taxes, personal income taxes. So if you buy from a collective investment scheme, right, then those are exempt. Collective investment scheme. If you just buy normal, you're going to pay tax on that, sir. Yeah. The law is saying I can read you exact law. It's saying you have to buy from a collective investment scheme. The other one, if you just buy the individual stock, yes, that income or that dividend will be assessed as income and then you pay tax on that, sir. Does that make sense, sir? Okay, I think it's gonna smart for you. Are you okay with the answer? Do you hear me? All right, I think it's dropped off. All right, let's get Miri and Nuelu. Oh, Miri and
Sakalo, Mire
you have to
Mwilo.
you guys, I don't you guys have to help me. Oh.
Thank you for the information you're sharing. And I have about three questions. It has to do one with the last person that asked question now about dividend taxes. I
Yeah.
thought that when you buy a share in a company and you're paid dividend, that they already what is called withholding tax that is already deducted automatic from the dividend before it gets to your account. Then
Yes, they are saying it's an exemption. They want to encourage you to buy shares. So if you buy through a collective investment scheme, no withholding tax.
but if you buy through a broker, when the
Yes.
dividend is paid to you, is it not already
Yes.
withhold before you
Yes.
get the dividend?
But through a collective investment
Okay,
scheme,
collective investment scheme.
you will not.
Okay,
Yes. So if you buy direct, if you buy the stock individually, you pay tax. If you just buy a mutual fund, an ETF, private equity, venture capital, you don't pay
okay,
on that.
okay, got it. Then my other two questions. The second one is a situation where you invest in Nigeria, where you invest in equipment. For instance, you spend money in Europe and ship some trucks to Nigeria to operate. And I understand that you pay company tax from the proceeds of those businesses. But is there any tax benefits? The fact that you invested this equipment, you invested this huge sum of money through this equipment purchase that you ship to Nigeria.
Of course, if you did it as a company, you get to write out all the expenses. If you pay import duty, you write it out. If you pay the fuel, write it out. If you have that as an investment, you may be able to claim capital allowances on that. I'm not just saying. So of course, you claim all the expenses because you are using that truck to do business in Nigeria, yes, you can claim the expenses. They are taxing your net profit, not your turnover.
Okay, so you now deduct it, and then you have a. Is there a cap for yearly deductions, or is it over 5, 10 years period?
No, if you make profit, you pay income. That's it.
If you say that one more time, sorry.
If you make profit, then you pay income.
Okay, if you make profit, they. So how do you get the deductions then?
When you file your expenses, you put the deductions there. You write it. These are the costs I use to make my profit. You write that out.
Okay, the
Your
other.
turnover,
Okay, go ahead.
your turnover less your expenses is your gross.
Okay.
Gross less taxes your net income. That's what they are taxing. They are taxing your gross. Yeah,
Okay, thank you. And the last question: since you're running this business, obviously you have operational vehicles and maybe rental offices. You get to write those off as well.
correct. So the language is any expense used
Hmm.
wholly and exclusively to generate income can be written off.
Okay,
So
got
if
it.
I have a school
Hmm.
and I go and buy a Lamborghini,
Hmm.
I can't write that Lamborghini off because that Lamborghini is not needed by the school.
Hmm.
But if I have if I'm Davido, I need a Lamborghini to do my home video. So yeah, I can write a Lamborghini off. It has to be exclusive to the business,
It has to
not
be.
every expense.
Okay,
If
got
you
it.
are, yeah, if you're a farmer, yes, and you are going to Abuja, you rent private jet. They'll ask you why private jet or what's wrong with flying first class or whatever.
Mm.
But if you are a billionaire, and write
Yes.
up the sum of the day in Greece as an expense. No, what in concern Greece and Abeokuta.
Yes.
But if they are holding a conference in Greece on new seeds for cocoa, and you go to Greece to attend that conference for new seeds in cocoa, then you go to the beach, you swim, you do all that stuff, you can write that conference off as a cost of doing business in Abeokuta.
So
Make
this,
sense?
yes, the short and simple is this tax thing is tailored towards the American tax code as well. It's
That
very
is
similar.
correct.
All right.
It's very similar to the American system of self assessment
Mm.
and all that. They are going to introduce more things. There's no basis. If you look, if you're an American, if I say basis, you know what basis means. There's no basis here
Yes.
because it's too complex.
Mm. Mm.
Nigerians cannot do basis with. So I think down the line they will introduce basis. It will answer a few many things. But you can see if you know American tax law, you
Yes.
see where they are going to with
Yeah,
this. Yeah.
it's almost similar. Thank you so much. Appreciate it.
Very correct, sir. Thanks so much, sir.
Mhm.
Let's get also offer the ultimate. Offer the ultimate. I gotta go, guys. I gotta
No,
go
Mr.
eat.
Yeah,
How you
Mr.
doing?
Kalu, good evening. Can you hear me?
Good evening. I can hear you. Hard stop in about 10
Okay,
minutes. Yeah, I can hear you. Yep.
okay, thank you. I have two questions. The first question is that if someone earns a salary and then because we already know that before companies pay you salary, they've already deducted tax from it, and then your income is still above 800K a year, are you going to pay personal income tax from that earning that you earn? That is the first
Salary.
question. Then,
Salary.
yes,
Yes, you
yes.
pay. Any income above 800K, you pay personal income tax.
Okay. Okay. Then my second question is that I'm in charge of procurement in the office, and my finance guy has been telling me that from next year, if you're bringing a receipt, it must be generated from FIRS. So whoever you are buying from has to be registered with FIRS to generate the receipt. So I don't really understand what he meant. Does it mean that every company that I procure any item from must generate that receipt from FIRS, or it must have an FIRS approved number for the company to honor the receipt? That's my second question.
No, I don't think you need to get a receipt from FIRS, but I think that you have to make sure that who you are buying from, my advice, this is just my advice, has a vatable license. Because if you buy goods from someone that is not vatable, right, and is supposed to pay VAT, you cannot claim that goods and services as a cost of doing business if it's VAT and import duties. So let's say you buy a bus. The person bringing the bus into Nigeria is supposed to have paid import duty. Let's say he brought that bus through Badagry, he didn't pay taxes. If you buy that bus, you cannot claim that bus as an expense in your company. That's maybe where he's going to. The FIRS is also asking people to try and get digital, that try to digitize your payments, your invoicing. They prefer digitization. So they are also saying that maybe that's what it's also saying, that make sure that the company is either going to get digital or is tilting towards that side. They don't want cash or paper. They prefer digital because going forward, they'll just come to your company, plug in their computer into your company and download your transactions. That's what they're going to go to. That's what he's trying to say. Yeah.
Oh, okay, okay. Thank you so much. That's beyond my
Hey, you're
question.
welcome. Thank you, Offer. I appreciate you. Anila,
That's a good people. So I've been listening to everything I've been saying since just to learn. But you made a statement earlier that anybody, any, will be paying tax, whether PIT or CIT and all. So the question I
depending.
have is, hello, can you hear me?
Yes, I can.
Okay, so you said anybody, any, will surely pay tax. And
I
that's why I
said,
requested for the
I,
mark.
I said, anybody, everybody has got to file, whether you earn or
Okay,
you
yeah, sorry,
don't.
you said when you got to file, whether they meet up to the threshold or not. Yeah, sorry about
Correct.
that. Okay, so now the question I want to ask is, like, you have been talking about most people that operate, most people that have been coming on board to ask questions. I'm talking about maybe large scale or medium scale businesses like company and all. And me, I'm uh, class. So I want to ask this question that let's say for example, let's say I have a salon, I have a barber salon or like a dry cleaning shop, like a laundry shop, whereby let's say I have like one or two. Okay, let's say I have like three salon, and these three salon I have like three boys working at different places. So, during this cash crunch of 2020, 2021, I think 2020, during the election time, most people switched to OPay and quote unquote to fast
And you gotta
transaction.
get to your question really quick. What's the
Okay,
question?
sorry. So the thing now is that like most of my boys at work, like they use OPay now. So they make like roughly, let's say 300, 400K a month, But
A
that,
month.
yeah, that, OPay is analysis or thing that at the end of the month they will send you the records. Because that's how I used to track their
Okay.
monthly income.
What's the
So
question?
now the question is that how can they fight for their, because this account they are operating is their personal accounts. It's not really business account. Individuals have their own accounts that they use. Whenever a customer comes in, they call the customer there, or the dry cleaning shop. Whenever a customer drops it, or they just use their personal account to receive the money, right? So they send the receipt, so I use the receipt, and at the end of the month, we use what OP is saying to make the calculation. So how are they going to file for the tax? One. Two is that are they going to be charged on CIT basis or PIT? Or how can they legally avoid paying that tax if it's going to be too much? Please.
Well, so
Or let's say, yeah.
So
Let me stay there first.
if you're a barber, we've said it here that every organization should pay slip. And I said if you work for anybody, request for a pay slip that has your basic housing and transport. I said it here. So I would advise you pay your barbers pay slip. If you're paying them commission, same thing. Pay them commission, but you have to give them a pay slip. because they're going to use that pay slip to file their taxes. If they earn above 800,000 naira, they have to pay personal income taxes, no exemption, right? And they will pay personal income taxes if they do not have a company. Nothing stops your barber from resting a company called Kalu Barbers or whatever his name barbers, and then charging those workers barbing haircut fees as his income. It's not illegal, but you have to file every tax you get as an individual or as a company, sir. All right, Bill, I gotta go real quick, guys. I think we have stopped. Let's just take the guys that we have on screen. No, we're not adding anybody else. OZ, go ahead. What's the question, OZ?
Okay, quick one. I just want you to state the ways that we can legally avoid Nigerian taxes,
That's
because I'm
what we've
just
done. We've done that for
I'm just
3 hours now.
yeah, I'm just joining in. So I don't know
I
if
know
there's a very
it's going
some.
to be recorded. It's also on YouTube. This podcast will also be recorded. Just when we're done, go back, look for the podcast. You can listen to it. It's recorded 3 hours, lots of ways, lots of slides, and we have slides as well. So you're going to get
All
all of
right, all
this.
right,
Perfect. Thank
all
you
right.
so much. Hey, Prince G. Prince G.
Good evening.
Hey, Prince. How you doing?
Fine. My question: someone who has supermarkets
Mm-hmm.
and people comes in and they keep paying, transferring to their POS machine, and as in keep paying like that. How do you tend to? What can you do for you to know that okay, or the government to know that okay, this money that are coming in is coming in through transfers of things that you are selling in the supermarkets. So how will somebody go about it?
Where is the money
And
coming into?
lastly, the most painful thing is that this government want us to
Hold
behave
on,
as
hold up,
if they are
hold up,
UK.
hold up, hold up, hold up, hold up. Just leave government aside. So the money is going where? Where's the money going to? Personal or business tax account? Where's the money going to?
Business account, supermarket account.
So, what's the question?
The question is, will the government know that those money that they are transferring into that account is for the business, or won't they think that maybe it's a random people that are transferring money to that business, into that account?
The government is not really interested in your transfers. What they want is your annual books of account. It is in your annual books of account you're going to say we sold X amount, we bought X amount. This is our gross profit. That's what they're interested in. Those transfers, again, I would advise you if it's only for the business of the supermarket sales, reserve it only for supermarket sales. So if they come and audit you, you can say all these transfers represent sales. So it's easier for you to do. That's what I would advise you to do. So don't mix it up. If there's money for annual general meeting, don't put it there. This is only going to be money that your customers are paying you directly to your to the account of the supermarket. So it's a lot easier for you. You already have the transfers coming in. You have statements. You file your annual account to show revenue, which is your sales less your cost. It's the gross sales the government is interested in, right? Right, Prince. You good? Excellent. Abiola,
Yes, please. Good evening.
how you doing, sir? Abiola
I'm
Moses, what's up?
fine. I want to ask a direct question.
Yeah, go for
First,
it.
I'm not based in Nigeria, and I get paid in Europe, and I file my tax in Europe, for example. And sometimes I remunerate money back to the country, to my personal account. So I have a friend or a partner that has a transportation company in Nigeria, and I invest into his transportation company. And it gives me like a monthly repayment. And this monthly repayment is paid directly into my local accounts. How do I go about filing those taxes? Like
You
what
just
I
yeah, you just go to the state you are resident in and file those taxes on the state's internal revenue service. That's it. You just go.
no, what I'm saying is I'm investing into his company. I'm assuming that he has paid tax or is going to be paying tax, but it's just giving me my profit
Yeah, that's
based
not
on.
your only issue is your profit. When he gives you your profit, that's your income.
Okay.
So you just file for your income alone. You just go and you file your income. You don't have any issue with it. Are you a shareholder in that business?
No, I'm not a registered shareholder. No, I'm not.
Fantastic. So your only issue is the money he gives you is your income in Nigeria. That's what you should be interested in only. Yeah.
Exactly. So, let's say, for example, I get like 1 million, let's say in a month from him, for example. So, in which way can I avoid this tax? Because, like, I invested in the previous years, going forward into 2016.
You
It,
can't avoid. I don't know. I get your question.
yeah.
You are collecting the money as an individual. So the only way you can avoid those taxes is going to be those five items I listed. You can't do anything else as an individual. Only your pension, only your insurance, only your NHF. That's the only thing I've open to you, sir. If you invest as a company, you have more leeway. Understood?
Okay, I understand what you're saying.
Yes, sir. Thank you so much. We got Olumide, is this on links and Prosper, then we'll call today, right? So Olumide, go ahead, sir. Abiola, thanks.
Yeah, good
Olumide,
evening.
how are you doing?
Kalu. Can you hear
I
me?
can.
Okay, so I'm going to like make it quick. Let's say for instance, probably you earn from a company where they pay you monthly salary, and probably you and your colleagues you're doing like a monthly contribution. So probably when it's time for you to like have your own share of the monthly contribution, is it going to be added as part of the money you'll be taxed, or is it going to be different?
So like a Susu Abi, like a Susu Abi.
Mm, yeah, something like that.
So look at it this way now. You are getting money and you are paying money. It nets off. It nets off. There's no income. There's no net income. Each you have five people. Today you pay the first one. Tomorrow you pay the second one. Next month you pay the third one. Then you pay the fourth one. Then all four give you money. It's net zero. There's no income.
Oh,
There's no net income coming in. You pay out 300, you get
um,
300. Abi, the difference is just I guess your money in bulk.
yeah.
There's no difference. It's just bulk money, but that bulk money is also going to go out. I'm just assuming that that's not even going to the personal or corporate side. There's no income per se. Money has come in, money has gone out. Same money. Abi?
All right.
Excellent, man.
Yeah, thank you.
All right, let's get
Thanks.
is it Sona?
But she called me.
Prosper, yeah, Prosper, go ahead.
Yeah. Good
What's up,
evening.
man? You're the last guy we're gonna take for corporate day. How you doing?
Good
Ask your
evening.
question.
Good evening, Mr. Calvin. Thanks for this space. I really appreciate it. I
You're welcome.
want to ask two questions real quick.
Okay.
Um, how do POS operators um, approach this task?
Are they operating the POS as a
Yeah,
personal
I have someone who operates POS as a business is registered.
did he register a company or as his personal name?
It's a company name.
Then he can claim his expenses and all the stuff we've talked about as an expense. That's what he can do.
Okay. Um, the
And we've
second
talked.
the second
Yeah, go
one
for it.
is
Yeah,
I'm a forest trader, and
yeah.
I checked my total income for the year was my total inflow, not income. It was ranging around 50 M. So
Uh-huh.
I just need an advice from you. By next year, how do you think I should approach this tax?
There's no change, my brother. If you are trading your personal name, you cannot avoid any taxes that we've talked about. You can only do pension, insurance, and the rest. If it's your company name, you might be able to write out the costs of making the income. Trading loss is not an expense. The computer to trade is an expense, right? So remember that if you are doing trading losses on the passive side, you may be only able to write off passive income. You can't take trading or trading losses and write off as non. trading income. That's what I would advise you. Yeah. So if you're just a personal side, you limit your expenses you can write off. If you don't on a corporate side, you open yourself up to more expenses. But remember, you can't take passive losses into non-passive income losses and write that off. Just keep that in mind. Yeah.
All right. Thank you very much.
Perfect. All right. Excellent. Thanks, guys. Guys, we have tons of requests. I apologize if we take everyone, we will not be able to get done tonight. But I'm going to have to do this again. Let's look at next Sunday. Should be the 28th. So we'll just do a repeat of the exact same thing. The internet today was kind of breaking up. I got lots of complaints on the folks on YouTube that it was breaking. So next week we'll just repeat the entire thing, the entire exercise. I'll do the same slides. I'll do the exactly same thing on YouTube and of course on Twitter, but it will be better internet connection. It's just because of the storm. The storm is causing lots of things not to go through. So I apologize on that. We'll do it again next week and we'll do the exact same slides, exact same stuff. So that way we give you guys a ground and understanding of this. And of course, you're going to get ready for next. So next week, do join to be the exact same thing, just second part for same slides and all. So if you're able to join, you would get that chance then to join. I appreciate you guys for doing that as well. So on that note, what we're doing here was to legally show you how to avoid taxes. Like we said at the very, very beginning, avoiding taxes makes you patriotic as well because it releases income for you to consume to grow GDP. It's not illegal. It's actually better for you because it makes you more efficient. You are the laws we've quoted that allow you to evade taxes are from the government themselves. I've not put in any opinion. I've gone to the act, pulled up the language from the act. I'm just explaining it to you. So don't let anybody gaslight you. You are a patriot for seeking to even pay your taxes, right? And that's what we want you to basically get out of this. There are legal ways to avoid those taxes because the government wants to encourage you to have a pension account, an investment account, and to do those other things. So take advantage and, of course, get that done for yourself. Like I said, we'll have to do this again next week so that we can get more, have better internet connection, do the whole recording again. So it's a bit of a glitch free and you can listen better. So if you want to have the recording to listen to, you might want to wait for next week. I'll make sure I got fantastic internet coverage and I'll just get that done. Either next week or Christmas Eve, we'll do this again. So that way I have a perfect recording and you guys can then follow. But thank you for joining. I appreciate all you guys that joined. Many are still here. I get it. It's a very, very complicated subject, but we've tried our best to make it very, very simple for you. We are here in this space every Sunday, 7 p.m. We'll be here for 3 or 4 more years just doing money, personal finance, and of course the economy. Last thing, most of this stuff are already in the book. I read this book 2 years ago, and we already captured some elements that have just come out this year. So if you do have the means, go to Amazon, buy my book. Let's talk about your money. Most of this stuff we're talking about are already in the book. Even before the law came out, you will see it there, right? If you don't like it, send it back to me. I give you a refund. No problem, right? I appreciate you guys. I'll see you guys next week. Thank you so much for joining. You guys have a fantastic rest of your day, and I will see you.